Welcome to the session. Um, I am Kedar, and I'll be taking this session as a brief introductory to the markets to share you some of the facts I know about the markets, being in the market since the past many years, and brief introductory about momentum investing, uh, rough structure of what it consists of. Now, before I begin the session, I would like everyone to keep an open mind about what I'm going to teach you in the session. Some of you might be beginners, some intermediate, some might be experienced ones since being many years in the market. So, even if you are an experienced one, even if you know many professional things about the market, the markets still have got a lot to teach of us. The markets are always supreme. The markets are always right. They are the only right ones. And even after many years of being in the market, it I still learn something or the other from the markets every day. So the market has a lot to teach, even if you think you know a lot of things. So I would request to keep an open mind about the things I'm talking about. You can go check those things after the session to confirm them. In general, just keep an open mind. So you, because you may be encountering some contradictory things which you might have known. So what I'm going to share with you might be contradictory to what you already know. So know that everything has a different perspective, and you can have a back check on it. Yeah. So let's begin. Okay, so this session is the first of the many sessions which uh, I'll be taking for my student who will be learning the complete strategy A to Z of what I do. And how I follow momentum investing. So this is the first one, and since it's the first one, it will be more of an introductory session where I'll be giving you a brief of the basics, some facts which you might not be knowing. Okay, and some do's and don'ts. And at the end of the session, I'll be talking about some mutual funds and some basic about the mutual funds and which I get asked a lot. Yeah. So this will be the first one, and since it will be the first one, I'll be uploading it on the YouTube. Okay. I hope you find this helpful. So yeah. So momentum investing. So this has been the game changer in the markets. Okay. So such a basic start, I know, but still. Okay, so first, why the markets? Like, why are we even entering here? What's the purpose? It is to grow our wealth at a rate higher than what the inflation is. So inflation is around 6 to 7%, varies. So it's eating up our money slowly year by year. So we have we need some instrument which where we can invest to grow at a pace higher than this. So that's why the markets. Okay. Now one of the questions, basic question I keep asking people, or which occurred to my mind some years back, is that why do people struggle to uh, go into trading, or go on picking individual stocks to trade, or why do you need to create a portfolio of your own? So so this was the question which kept bothering. I mean, why do you have to take all the trouble to learn so much about the markets, and like put in so much effort and all, when you can just give your money to the mutual funds or even SIP in the index Nifty 50? Because eventually in the long term, we all know markets will always keep going up. So we could make money. So why all this hassle? So the whole point of active stock picking and all of these struggle is the main goal is to beat the index. I hope you're able to see my cursor. I mean the mouse pointer.
Uh, no, I cannot see your cursor. Oh, yes,
You,
now I can. Yeah.
now you can. What about now?
Yeah, yeah. Now I can see the cursor.
Okay, you can see that I'm moving it. You can see.
Yeah.
Okay. So the whole point of active stock picking is to beat the index. What I've noticed is most of us tend to forget this after entering the market. It just becomes like something we are invested in, something something like we get engaged in it so much that we actually fail to see the whole point of investing. I mean, it's a simple question that you are putting in so much of your time, energy, and effort. Why? Because your goal is to beat the index. Beating the index is your goal of actual stock picking. Active stock picking is to beat the index, which most people tend to forget. Okay. What I've seen is they struggle in investing. They try investing in blue chip stocks, or they try FNO trading or internet trading and all. And I've seen some majority of them make losses, and some of them they generated about 8% to 9% or so, and they were happy, and they were extremely happy, and they were showing these results to me and all. I was happy for them, and it was all good. But in that happiness, what they have not realized is that the index beat them. Nifty has given more returns than what they have generated. So why all this hassle you took? I mean, FNO trading is so tedious. Obviously, we all know that. It takes a lot of uh, stress and peace away. Actively watching the market, like it's a huge risky game, and you're able to generate somewhat returns. But what's the use of it if it doesn't beat the index? I mean, you can safely invest in Nifty 50, either SIP every month or even in lump sum when it crashes, or so, and you can safely generate around 10 to 12%. It's a fair play. It's a fair game. Uh, but you're taking so much risk and everything to do active stock picking and not even beating the index. So that's a loss to you. So you should either improve your system, or you should um, just stick with the mutual funds or index if you are not willing to learn, or if you are not able to get there. So what I've observed is most people fail to do this. Most people fail to beat the benchmark. I mean the Nifty 50. So but momentum investing beats it, which is why it's one of the most profitable strategies as compared to value or fundamental investing. So the proper system, yeah. So in order to be profitable in the market, you must and should have a system. Okay, you must have rules. You must act on the rules, because when you're trading with real money, and if that amount is huge, or even if it's small, your emotions take over you when you're trading in the markets, be it fear or uh, be it FOMO or greed. These all come into play when you're actually dealing with money in the markets. So, which is why you need to have a system. Yeah, you need to have these things in order to be considerably profitable in the markets. Okay, so what I've observed is many people don't have a system. You can see many people in the uh, groups and all, they keep asking others, is this a good buy, or I'm holding this for 3 months, should I sell it? I mean, no one can answer you that. You have to figure that out. You must know why you bought that stock, on what basis. Are you an investor who is going to hold that, or when to sell it? Okay. What my rule based approach is that when I select a stock which I'm going to buy, I already know the point of exit. I already know when I will get out of the stock, even if it is at a small loss. I will I will be knowing that even before entering it. So this rule-based approach will save you from your emotions taking over, which will help you protect from losses and even maximize your profits. Okay, so this is the first one. How to filter the stocks? Yeah. The upcoming ones will be, so how to filter stocks, what stocks to buy, when to buy, and how much quantity to buy. These are all very important. Okay, you must know why you are buying that stock, and when you should be buying that. It's not like randomly you go and buy it at any time. You must be knowing when to buy that in order to maximize the profits and the quantity. It is important. Okay. Next is how to maximize returns by not selling a stock too early and holding it till its trend is up. Okay. So now what do I mean by that is I don't sell too quickly. What I've seen many people is that they buy a stock and it goes up by some percentage and they quickly sell it with the fear that it will fall down now. So by following proper rules, you will avoid this. For example, let me show you this stock STBL. Okay, sorry for that. Let me remove these drawings. Okay, yeah. So 1 second. Okay, so I had bought SDBL right around here. Okay, uh, in the starting of the April, I had bought it around here, and it went around uh, quite nicely in a very short time. So what most people end up doing is here, let's say hypothetically, this is around roughly around 30 or 40% up move. So they try to sell it here. Okay, thinking that it will fall now. So this is selling too quickly. Okay, which I don't do because I don't want to lose out on the majority of the move. I want to capture the majority of the move. See, if I had sold it here, I would be missing out this huge rally. Okay, so to tell you, this is where I got out of the stock. Okay, around here. So if I had sold it at a 30% profit, I would have missed the rally around 100%. Yeah, you can see it gave 100% within some 4 to 5 months. Yeah, from April till August. So I would have missed out on these gains. So you don't need to sell it too quickly. You should know when to hold the stocks. This is my system. And okay, to sell a stock and how much to sell. This is very important because you you should know when you are wrong and you should get out of that stock immediately because you cannot be right 100% of the times. No one is right. When I take 10 trades in a ideal market condition, I mean when the market is good, like a bull run, I am right 6 to 7 out of the 10 times. Okay, I lose 3 to 4 of the trades. um, s- 6 to 7 times when I'm right, I make profits like I made in this one, giving me at least 30 to 50% के आसपास, and some result in a huge like 100%. So double my capital. And when I'm wrong on the 3 to 4 trades that I take, I try to limit my losses small. Okay, I try to keep them limit them around 8 to 10% के आसपास. For example, let me show you why is it important to sell this. This is Zomato ka stock. I had bought it when its IPO was launched, and here I had bought it around this time. when it broke out of the base with good volumes. It fit my criteria and I had bought it, and it quickly went against me and I had to sell it right around this point. Okay. I had to sell it around this point for a loss of roughly around 10 to 12%. I took that loss, and you can see what happened after that. It saved me from such a huge drawdown, and this is not just a loss of capital, but it's loss of opportunity cost and my time. Okay, now you can see it's just started this small up move, but still it has a long way to go. It has still not yet came up to my buying price, and you can see it was from 2021 November. So lot of time and capital saved just by booking at a small loss. I moved that capital to some other good stock and I recovered that loss. So that's how you do. That's why it's important to sell. And position sizing, this is also very much important. The amount of money you make, okay, that is dependent on uh, how many times you are profitable, how quickly and how small you are keeping your losses. And the next thing is position sizing. I'll show you why it is so much important, position sizing, because even if you're right, and if you don't have um, a major chunk of your portfolio in that stock, you will be making little to no gains. This one was an example of a person. There are many of them, even you might be knowing. I found on the group few days back. Okay, you can see here he has made 87% gains. Okay, you can see here 87%, 78%, 31%, but the amount is negligible. You can see because you had invested only 2000 only, like this is negligible amount as compared to your total amount. Okay, as compared to the total capital you have, which is why you need proper position sizing. Okay, you need to split that amount into your stocks properly so that when they move up, you should it should affect your portfolio in a good way. Okay, so you need to for example 87% move, uh, when it moved, obviously it wouldn't have gone 87% in a day. It would have moved first to 20%, and then you should have add more to that. When it went to 50%, you should have add even more to that. So this conviction you should have. For example, I so let me give an example of this one. Okay, I had traded this stock. So assume that I have a portfolio of 10 lakhs, hypothetically speaking, and I have 10 stocks to invest in. I allocate 1 lakh to each stock. Okay, and this 1 lakh, I don't put it at one go when I'm buying it initially. Okay, I first put only 30 or 50,000 depending on the environment. Okay, so let us say I first purchased 50,000 around this point when it gave me a breakout. Okay, now this is called pyramiding concept. Okay, so it broke out of this small base. I add some 10k here. It broke out of this base. I add another 20k here, and when it broke out of this base, I add another 20k or so remaining, which would add like one, which would complete my 1 lakh buying in this stock. So I increase my positions. Now this allows me to maximize my profit. So it gave roughly around 70% move. Okay, I sold it around here. Okay, so this maximizes your profit. Okay, which is why position sizing is very much important. Because if you don't increase your position in a stock, even if it gives like 100 or 80% move, it will have negligible returns on you. Okay, which is why it is important. Next is the risk management. This is to protect you. You must have proper psychology and risk management to protect you from heavy losses, which is why I make sure I lose small whenever I'm wrong. Let me show you. I've been wrong a plenty of times. This one, but I make sure that whenever I lose a small amount of it. Okay, So I had second. So I had bought it around here when it gave me this VCP base breakout, sorry, a good consolidation. It broke out from this base, and I had bought it here, and I quickly sold it for a 10% loss के आसपास around here. Okay, when this huge volume and this selling took place, I had to sell it for a loss, and not just that, even this one. There are plenty of them. Where is that? Yes. Okay, this one I had bought it around here when it gave me a good breakout. This is IP based breakout, by the way. Okay, and I had to sell it right around here. Okay, I had to sell it with the negligible gains. You can see here. I had bought it here. I had to sell it here. A little bit of time wasted and this, but I had to follow my rules and I had to do it. You can see it showed me from my capital getting tied up around here. Yeah. So this one and yeah, I took a loss even in Cochin shipyard. Okay, right around yes, right around this time when the earnings came out and it uh, dropped around 10%. I bought it around here. Okay, uh, and this is where I booked a loss, and later it set up and I bought it again around this time. That's no issue, but I never fail to follow my rules. And this one, yeah, okay. This VCP, it had formed, okay, and I bought it around here, okay, thinking that it would give a breakout. And what happened was the very next day it fell and I sold it around here for some 6 to 7% loss, and you can see what happened after that. It that huge down move. So I avoid these by quickly booking the losses. Okay, and next is psychology. Okay, what most people think is that you need to be right 100% of the time, which is impossible and which is not true in the markets. Market having a good market psychology is very crucial. You should know that you should understand that market is a probabilistic game. uh, you always deal with probability. No one knows certain that this stock will go up or go down, which is why we have rules. We manage risk. Okay, knowing that, I always know that in a good market environment, when I take trades, I know that always three to four of them will result in a loss. I'm prepared for that. Okay, so I don't let my emotions take over. If I mean, if a stock fell by 10% when I bought it, I don't hold it thinking that it will again come up to my buy price. Okay, I quickly exit it because to avoid that huge drawdown. Okay, I showed you that in the previous examples. One more, if I wanted to show you datamatics. Yeah, I was in this stock here. I had bought it around here, made some good profits, and look what happened. It broke this trend line. It fell like around 19% in single day, and I booked it right around here. I had already kept a sell order. I keep updating my sell orders. Okay, so I booked it around 17%. I mean, like I was still in profit because I bought it around this time, but yeah, 17% ka nuksan, like I had to exit. But the next day what it happened, see, it rose by 11%. But you can't do anything about that. I still accepted it. A rule is a rule. And look what happened after the following days. It's just moving sideways. It's of no use to me. So this is why having a proper rules is very important. If had it against formed a base here and given me a breakout, I would have considered again buying it. You can always do that. I've done it in Masdoc, I've done it in Cochin Shipyard. So yeah. So having that psychology is most important. You should not let your emotions like fear or FOMO get into that. Okay, and next is very much important. When to trade and when not to trade. Okay, what majority of us do is that uh, they think that you have to be in the markets every single time, which is very untrue, because you should only be in the markets when it is in a bull rally. Okay, because in a bull rally 80 to 90% of stocks will be moving up. You can easily make money in that. And when the market turns bearish, 90% of those stocks will be down, they will be hit. In a bad, you should identify bad market environment, and you should not trade in that, because you lose all the profits you have made. I've seen so many people, they made huge money during COVID bull market. Okay, and when the market turned bearish, they they kept holding on to them, or they kept buying new stock, they kept trading, and they lost all of their gains. So let me show you. This is Nifty. Okay, wait, let me switch it to that weekly one. So you can see here, this is that bull rally. Okay, and when the trend turned bearish, you should know when you should get out. Okay, during November 2021 के आसपास time, I was already cautious, and I had already started selling almost all of my positions, because it had given me signs of distribution. Many of my breakouts were failing, the market was under distribution phase. Many of the stocks which had rallied, they were plummeting down. Those were early signals that the market had was showing of bear signs. So I had to sell all of that. You can see what happened after that. It entered a bear mode, and in this mode you should not touch a single stock. You should not stay invested, because you don't know how long this phase will go. It could go on for even years, or it would go on for months, or for a huge long time. You don't have that idea, so you should avoid trading, because 90% of stocks will struggle to move during this time. Even good stocks like let me show you. Where is that? HSCL. Yeah, you can see here this one. Uh, wait, okay, let me switch to the daily time frame. Yeah, you can see here market had a good bull rally till December 2022, and after that it started falling. It started falling. Okay, so even strong, this is a strong stock because it fell less. Okay, it was holding pretty much good. I was looking out for it at that time, but it was struggling to move. Still, it was struggling to move. It was a strong stock, because many stock fell by humongous, but it was still above its 200 moving average, and it was showing good relative strength. But still, it was struggling to move. Why? Because it was market was in a bear mode from December 2022 till March end, till March 2023, and in April it began the bull rally. And you can see how easily it went, how easily these lines were drawn when I had to add my positions in here. Okay, you can see how much, and it is consolidating right now, how much rally it gave easily, because in a bull rally it's easy to make money. 90% of the stocks, even the sluggish stocks, will be moving up. But the real testimony comes when the market enters a bear phase. You should know when you should get out. Okay, so moving on, so these are some basics. You should not try FNO. Now, why do I say for a beginner not to try FNO is, even I have tried this. I've went deep into the FNO, because it like I too was attracted to it in the initial years. All that get rich quick thing which attracts us and all. And I've made so much losses. Even after developing a system, I've not been that profitable in FNO. And what I realized was that it was due to the probability game. In FNO, 19% of the traders they lose their money, as posted by SEBI uh, this year. It's because the probability is so low in winning FNO. The time is that there is a concept called time decay. It will be against you in option buying and all. Overall, it's a losing game, and you have to be continuously attached to the screens and everything. Just give me a moment.
Sure, yeah, sure.
Hello.
Yes, yeah.
Yeah, yeah. Okay, I'll continue. Sorry for that disturbance.
Sure, sure, sure.
Okay. Um so yeah. So the probability is the probability of winning is what I've realized is the probability of winning is against you in FNO. Okay, and FNO were originally hedging instruments. They were not meant to trade. They were meant to hedge against if a crash happens or uncertain volatile movements. And I've seen, I know some of the people who are profitable in FNO. For instance, one of my friend, he generated around 8 to 9% over a course of 3 months using FNO, and he does it safely by using hedging and all. But yeah, you can generate only so much percentage, but he generates it on a capital of 40 lakhs and uske आसपास. So he's happy with it. He's okay with it. Uh, is okay with the risk because he hedges, and that's good for him. But still, the returns are low. I mean, 3 to 4 months, 8 to 9%. It does not matter the capital. The capital doesn't matter. I'm talking only about the returns, like 8 to 9%. So that's still low compared to what I know in the equity market segment. So I stick with equity because it not only gives me peace of mind while trading, but it's in the probabilities in our favor while trying the strategy out. And why I say no to crypto is it's a bubble. It can burst anytime. I've known so many people, maybe even you might have known, who are stuck in crypto because they had invested during June or October 2021, where crypto stopped, and now it's down like around 200% from its high point. And again, intraday, I don't prefer it because you have to close your trade within that day. So its edge is very low. I've even tried intraday also, and this is very much important. No news based trading. Like I had shown you an example of Venus pipes in the previous session, where they released a news article showing that insider is buying 75 million, and the very next day the stock fell by 15%. So never trade on news or tips of anyone. Like if a friend says buy XYZ stock or etc., do your own research, do your own analysis. Never uh, trade on news, because of done these mistakes and have incurred losses plenty in the initial year. So I've made it a rule that I won't be trading on the news and all. And yes, I'll show you some examples here. Okay, this was Venus pipes. Okay, not this one. Wait. Yes, this one. You can see when it was published. It was published on September 24th, 2023. Okay. The news came out saying that insider spent 75 million buying more shares in Venus Pipes. Now, what all the retailers will do while reading such news is that they will jump to buy the very next moment the news comes out. Okay, so let me show you what happened in Venus Pipes right after the news came out. See here. Oh shit. Let me just remove drawings. Yeah, you can see what happened. Okay, this is 22nd September. Okay, 23rd was Saturday, 24th was Sunday. The Sunday the news, the article came out, and what happened on Monday? It fell by a whopping 15%. This is how the institutions dump their shares onto retailers like us. This is what happens. A huge 15% down move in a single day. This is humongous. Okay, this is why you should never do news based trading. Okay, the stock had already been in an uptrend right from this point. Okay, I had already bought it around here, and it gave me a very good returns. Okay, So that was the ideal point of buying, not when the news came out. The news always comes late. The news will always come out late. Some stocks which have been getting a lot is this one, Delta Corp. Let me show you. Yeah. So Delta Corp, you can see it crashed very heavily, and many people are interested in buying it around here. It will go even more lower. Okay, so which is why you should avoid these mistakes. Some people even average down. They buy more as it is going down. That's a short way of losing your money. You should never do that. And um Vedanta, okay. See here, promoters are paying influencers and news outlet to recommend buying them. Okay, you can see here this one. So all good news about Vedanta, this and that is coming. The reality, I'll show you what's the reality of it. Why I advise not news-based trading. You can see here what is happening in Vedanta right now. Uh, See here, bloodbath. This is literal bloodbath. What is happening here? You can see here huge selling volume. The stock crashed. You have to avoid these kind of stocks in any way. Okay, you should avoid this. This short term rally came after the news came out. Okay, this will trap a lot of us here. You might think that it will go up from here. No, it won't happen. It will crash further down. Okay, you should avoid these kind of stocks at any cost. Huge selling volume. This indicates something is wrong. You can see here huge volumes. Something is wrong inside the company. Something fishy is happening, which is why you avoid such stocks like Vedanta, Delta Corp, Naveen Fluorine, and etc., which are currently taking place. You should avoid them at any cost. Okay. Next is one of the most important things which many people don't tend to understand. It is that when a stock goes down, when you buy a stock at 100, it falls down to 90, you simply sell it. I mean, as per your sell rules, of course, it not has to be 90 only. It could be 95, or it could be when it comes to 85, you are selling. Have a system that what most people tend to do is the opposite. They keep on holding to it, or worst, they even average it. They even add more as it goes down, with the hope that it will come back up. This has two major disadvantage. It not only um, is a losing game, because you never know if it will ever come back up, and most of the times it doesn't. And even if it comes back, it will take years to do that. And in doing that, I have lost my opportunity cost. What do I mean by that is, I could have put that money into some other good stock and would I have locked my capital into this losing stock, and I've lost the gains which I could have generated. This is called an opportunity cost. I'll show you in the charts, like specifically what I mean by that, how much it costs you. So let me show you just one, two, three examples of what do I mean by that.
Hi, Aziz. Seeing examples will actually clear a lot of things out.
Yes, definitely, man. Okay, this is future retail, Big Bazaar. You might have known the stock. Okay, so suppose you suppose the point of buying doesn't matter. Suppose you buy it around here or around here, or let's say most retail, what we tend to do the mistake is we would be buying it at the top. I don't know, it's a coincidence or something, but majority of the time this happens. We buy it at the top, somewhere around this region, and it starts falling. And what happens is we are not willing to accept the loss. I've seen so many people, even I was like this in the beginning, not able to accept the loss and thinking that it will eventually come back up to my price and I can sell it. It's not a loss until I've sold it. This was that psychology I used to have. which is really wrong. And look what happens. It just kept on falling, and where is it now? It's at trading at 3 rupees. How much it was? It was around 586, and it's trading at 3 rupees. It never rose back up, and it will never. I'll tell you, it will never come back up. Not only have I lost all my money, I have lost since when it was? Since 2018. I hope you can see the date at the bottom. Since 2018 till now, I have lost the opportunity cost. I mean, if I took some 10% loss, and I could have invested my money into some better stock and made some returns, but I couldn't. I lost my money and the whole opportunity cost too. So, not there are plenty of examples. For example, even this I shown you in the last class. If even if I had bought it, I've had profit, and I was just with the ideology that buy and hold, uh, or like I'm a long-term investor. I'll keep adding on to it every month, or I'll keep um, I believe in this company. It has good fundamentals, vagara, vagara. You can see what would have happened. It not only breached, not only came to my buying initial buying price, it even went below, and now it's nowhere. And I'll tell you, it won't come back to this high anytime soon. Not anytime in upcoming 10 years. Not anytime. It won't. So there are plenty of these stocks. For example, even Yes Bank, so many people kept holding. You can see from where it fell, from this highs till it's a penny stock now. You can see here, and it won't rise back. It is never rising back. I've seen so many of my friends who had invested in this. They literally lost. They literally wiped out their capital in this one stock, because what they did was they bought it somewhere near the when it was moving up near the top here, and when it fell huge, they were reluctant to sell. And worse, what they did was, in this small up rally, they thought that it's going up now. It'll come back to this place, and they kept on adding it. And the more it fell, they kept on adding it. They kept on adding it. So you can see how many years it has been. It's been since 2018, and it has no signs of recovery, and it won't recover. So these are some of the example. We'll be seeing plenty of these to get a clear picture that why you should not hold on to your losing trades, and why you should sell them immediately. I mean, by immediately, I mean when it breaches your sell rules. Some of the do's and don'ts which you have to keep in your mind while you are in the markets. Okay, now the most interesting thing: how do stocks move? Okay, uh, contrary to what popular belief people have, stocks do not move randomly. They do not move based on fundamentals. They do not move based on uh, what that company is doing or what that company has. Stocks move in trends. They have a specific movement to them, which you will understand only if you see the charts, only if you interpret the charts on a weekly time frame, not on a daily time frame. On a weekly basis, it gives you a larger picture. I'll be showing that. So they move in trends. Okay, so they move in trends like, I'll show you the movement of stocks. Just okay. So how do stock moves? So basically there are three trends. One is the uptrend, the second one is the sideways trend, and the third one is a downtrend. So how do stocks move in an uptrend? Stocks which are in an up, what most people think is stocks would move like this when they're going up, or when they're falling, they'll fall like this. This is so wrong. This is totally a wrong concept. I'll show you how stocks move. Stocks create high, then they pull back a little, then they go high, then they pull back a little, they go high, they pull back a little. So this is what you can say, a brief structure of a stock which is in an uptrend. Now, how do you identify whether a stock is in uptrend or a downtrend or a sideways? I'll let you know. But this is the general structure of a stock which is in an uptrend. And then there is this sideways trend. This it's trading in a range. It's not moving high nor going below it. It's just side. You can see here it's just in within this rectangular region. This is sideways trend. And next comes the downtrend. This is how stocks move in a downtrend. So having a clear picture of this uh, uh, avoids you from many losses. Okay, so this is it. And just a second. Now, how to identify if it is a uptrend or a sideways or a downtrend? By visually looking, we can, and in technical terms I'll tell you how. Okay, so consider an uptrend. Excuse the poor drawing. Just okay. Let's say a stock is moving like this. Okay, now this, what we call it, is a high. This we call it is a low. This again a high. You can imagine these as waves. This is a high. I will show you these in charts also. Okay, in real charts, I mean. Okay, so when do we say a stock is in uptrend? Is when it is making higher highs and higher lows. Okay, what do you mean by higher highs? Is you compare this high with this high. Okay, what you can see, the second high is greater than the previous high, which means it's a higher high. Now you compare its lows. The second low of this second wave is higher than the previous low, which means stock is creating higher highs and higher lows. Okay, this should be on a weekly time frame. Okay, which means that stock is in an uptrend. This indicates that stock is in an uptrend. Okay, did you get it, or I have to uh, elaborate?
No, 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 no. I got it. Got it. Got it.
Got it right. Okay, good, good. So this is the general indication of an uptrend. Stock is consistently making higher highs and higher lows. Okay, now downtrend. So in downtrend, it does exactly the opposite. You can excuse the poor drawing. So the H are the highs and the L are the lows. Okay. So what this is doing in a downtrend is it is making lower highs and lower lows. As you can see in the figure, it is making lower highs and lower lows. The highs are getting lower and the lows are also getting lower. This is a clear indication that the stock is in a downtrend. Okay, even if you can see the chart and you can identify whether it's an uptrend or in a downtrend, you can avoid huge losses and save yourself so much time which would have been wasted. I see so many people on Reddit or even on social media or in general my friends who asked me XYZ stock. Please tell me what this stock is doing, or should I invest in this stock, or I have invested in this stock. Share me your analysis and all. And when I open the charts and I see this structure, I cannot tell you how I feel literally. I mean, just one glance, and you can clearly see it's in a downtrend. It's making. Uh, lower highs and lower lows. I mean, why would you trade such a stock? I mean, it is going down, it's going to go down, and you're still investing in it. This is because most people tend to avoid looking at the charts, and they tend to believe in whatever hypothesis they thought about the stock, or whatever prospects that company has, or on the fundamentals, वगैरह वगैरह. They have the reasons, but a clear glance would uh, avoid you from losing so much time and money, which gets trapped into stocks like these. Uh, so this is the sideways trend is, as you could imagine, it's a little haphazard movement. I'll show you a live example what's haphazard movement, and how much I hate such stocks. I literally don't even like looking at them. Um, so this is the haphazard movement. It is not crossing the highs and consistently, nor is it breaching the lows consistently. It's just in a like sideways movement where the highs are like uh, negligible distance from each other, and even the lows are like almost near to each other, and it's not in a clear trend like uptrend or downtrend. Okay. Now, why is a trend so much important? Uh, like like physics, like Newton's first law, when a body is in motion, it tends to be in motion. When it is in rest, it tends to be in rest. This concept even stocks follow. When a trend is established, a stock tends to follow that trend for weeks at least, or even for months, or it may follow even for years to come. When a strong trend, whether be it an uptrend, be it a sideways or a downtrend is established, it tends to follow it until it's been breached. There's a popular saying with that, a trend is your friend until it bends. So you have to always be with the trend. I mean, you have to always stick with the trend. You have to follow the trend. So let's hop on to the charts to see the live examples. Okay. Which one should I take? Okay, let's take this one, Mind Tree. Okay, you can see its movement. Okay, this is on a weekly. You can see here. This is on a weekly chart. This is daily one. The blue one, which is highlighted, is weekly, which I'm currently on. Okay, ignore the other things. I'll just turn it off if it's confusing and all. Okay. I'll tell you what this line is also in the later in this session itself. Okay. Uh, so this is the chart of Mindtree, and if you are not that familiar with technicals, I'll just briefly tell you what this is. So these are candlestick patterns where a green candle uh, indicates that compared to its previous candle, the price has gone up. This is the meaning of a green candle. The meaning of a red candle
Yes, yes.
is,
No,
yeah.
I think we need to get into that because I think this stuff is I know this stuff. So basic technicals, I don't think we need to get into.
Okay, okay, that's great. That's great. Okay,
Yeah,
okay.
this is your
So
200 EMA, right? This red line.
yes, yes, exactly. Yeah, yeah. You remember it from the last session. Yes, 200
Yeah.
daily moving average. Yes, yes. Okay. Yeah. Yeah. Just to avoid confusion, I thought of telling you. Okay, that's good. You know it. Okay. So red candle means the price has fallen. Okay, has fell. Um, so in the chart. Oh, wait. So in the chart, you can clearly see how it is moving. Okay, it's going up. It's doing a pullback. This is called a pullback, and it's again going up, pulling back, and it's again going up, and it is pulling back. Okay, so what this is a clear indication of an uptrend. This whole movement, this is an indication of uptrend, which means the stock is in an uptrend because it is making higher highs and higher lows on weekly time frame. Okay, so this is example of an uptrend. Okay, now what sideways trend is this region, this choppy region. You can see the price is not even crossing the high, nor is it like crossing this low. It's just in this rectangular box. So this is a sideways wala trend. This one. I don't like being stuck or to invest in such stocks. It doesn't matter how much ever good the company is. I won't invest in these kind of stocks. And next one is the downtrend. Okay, as you can see, it is coming down, going up, coming down, going up, coming down, going up, and here the trend reversed. You can see the trend got breached. It was in a downtrend during these. Why it got breached, I'll tell you. I took this example because of that itself. Sorry for the drawings. Wait. Okay. You can see here what I had told you on a weekly time frame. It should be creating lower highs and lower lows. It was doing like this in this movement. But what happened was that in here, the stock created a higher high. This high was breached and it created a higher high, and even this low was breached and it created a higher low. Even this, though it's very close to this, it's indication that trend is either changing or it might be moving in, it might be oscillating in a sideways. You can see as soon as the trend changed, it entered an uptrend again. This one, wait. It entered an uptrend where it's now making higher highs and higher lows. You can see here. So this was just a brief example of what is uptrend, what is downtrend, and what is a sideways wala trend. Okay, you can even see it here. Wait, let me just remove this. Okay, you can see here once an uptrend began, you can see the movement. Stocks do not move unlike popular belief. Stocks do not move up like this, nor do they fall like this. They move like this in an uptrend and they fall like this in a downtrend. They don't move how people think they move. They don't follow that linear fashion or, uh, you know, you can see here. Okay. You can see in which trend is it now? Tell me.
I think this has entered into a downtrend because it is making lower highs and lower lows.
Yes, yes, very good. Yeah, it's exactly. It's in a downtrend now. And when it's in a downtrend, people came to know about this stock or from I don't know what source or their friend told them or etc etc. And they keep asking me, I've invested in Mindtree. Tell me how. What do you think about this? And etc etc stuff. And I go to the charts and I switch to the weekly frame and I look at this and I'll be like इसको क्या ही बताना अभी मतलब क्लियर दिख रहा है कि स्टॉक डाउन जा रहा है. This is its major resistance. You will learn all of this. I mean, if you know it, it's even good. If it not, I'll teach you. Like it's just a basic concept. This black line, it's a resistance line. So it's a major resistance. It is not allowing the stock to get past this line. Okay, so you can clearly see that just by looking at the chart you can avoid losing your money. I mean, your friends might have asked, you might have bought it here or anywhere in this trend, and just by a glance you can tell that no, you're just wasting your time in investing in a stock which is going down. You can clearly see it is going down. Then why to invest? You want to invest in stocks which are in an uptrend, because once a trend is established, you can see September 2020 Till when did it go up? November 2021. Once a trend is well established, it it doesn't stop in weeks or months. It at least goes for some months. And similar with the downtrend, when a downtrend is nicely established, it does not stop. It continues going down for months. So you need to be aware which trend the stock is following currently. So this is important. Okay, a sideways trend, I'll show you classic example, which currently people are very, what you can say, the favorite stock of retailers as of now. I've I can't tell you how the number of people who ask me about HDFC, or the number of people investing in HDFC. HDFC, what do you see? Tell me.
Right now it looks sideways. Yeah.
Yes, it's purely sideways. Purely sideways it is. You can see here from COVID lows, it rose to some heights, and then it's been oscillating since February 2021 till now.
Yeah.
I literally hate this type of trend because money invested in February 2021, you could have gotten zero returns. It's all, it's almost like my capital getting tied up for 2 years. मतलब एफडी से भी ज्यादा पैसे आ जाते हैं यार, as than investing in risky instrument
हाँ.
like stock like this. So that is why the importance of identifying a trend is so much important. I mean, the importance of trend is very high. So you can see there is nothing rocket science here. Just a glance of the what you can say chart, and you come to know it's in a sideways fashion, and you avoid this stock. Many people are buying like HDFC because it, you can see previously it fell a little from its highs, so they are thinking it's in a discount and they are buying it. Maybe it will go till highs because it's a fundamentally sound company. I mean, if you switch to the a monthly chart, you can see that over the long period of time, over like 20 30 years, it's a long, it's a upgoing stock. But we are not investors. I mean, we are not traditional investors. We want to make quick money. By quick, I mean make the best use of money, because we, our goal is to beat the index. Our goal is not to uh, you know be make a little bit of profit. If we wanted a decent profit, we would go to mutual funds or Nifty 50. Why risk in trading stocks like these? So we want to make quick money. We don't want our capital to be tied up like this in stocks like HDFC. So its trend is sideways here. So many people are asking me. I just shared this picture and told them it is trading in this rectangular region right now. If it goes above this upper line, upper blue line, its trend, it means its trend is up. If it go below this, its trend is down. So I'll teach that these are like support and resistance. I'll be teaching you that in the further technical analysis session. Okay. So this is about the trend. So so you got right the importance of trend. Why is it so important to identify trend? Uh, Let me just check some other stocks. Yeah, you can see this one. It's clearly in a downtrend. So even this, many people are what you can say interested in buying these stocks. Some have asked me about these stock. You can see here it's in a clear downtrend, and it entered a sideways wala since October 2022. It's been in a sideways region. So we are not interested in these kind of stocks. These are like no use to us. These won't make us money. Even even this one, Infosys. You can see how identifying a trend is so much in it. It gives so much edge to your trading. Okay, I'll show you. Wait. Okay. Stock was in uptrend from here to here region. As you can see, it traded in a little bit of a sideways fashion in here in this region. Once its trend turned up, if you want to invest in fundamental good companies also, even having a little bit knowledge about trend will maximize your profits. I mean, if you avoid regions like this sideways, when you're even when you're trading uh, fundamentally good company, I mean like Infosys, so famous fundamental sound company, like it's a great company company wise. And you can see here identifying an uptrend. Okay, this was the COVID crash, you can avoid that, that those are unexpected these things. Okay, and see here, it started its uptrend. You can see how much up it kept on going. You can see here literally. Okay, from June 20 till April 2022 it was in an uptrend. You can see, uh, even if you had a little bit knowledge, I mean, even if you know a little bit of what how trend works, you can easily make money in a less amount of time in uh, fundamentals. I mean, if you are very risk averse investor, I mean, you don't want to take any risk and want to invest only in the fundamental good blue chip companies, you could have made you could have moved the probability to your edge by investing when it is in an uptrend, and avoiding this is main, avoiding it when it is in a downtrend. You can see here clearly lower highs and lower lows. You can see here lower highs and lower lows. Now some people are buying this, thinking that it's in a it's trading at a discount from its high till now, maybe. But I'm not a fan of this buy low sell high, due to mainly due to this reason, because when it's trading in a sideways fashion, it consumes so much time, man. It takes so much time to even come back up to its high. This is the high, the green line. So it's giving me a disadvantage. It's not beating the index. I want to beat the index. So this is the thing behind this. I guess this much examples were enough. So which is why identifying a trend is so much essential. If you're clear with the concepts till now, we can move ahead. Just let me know.
Yes, man. Up till now, it is perfectly clear.
Okay, good. I hope the flow is better than the previous session. I'm sorry, it was so, yeah.
No, no, actually, see, last session was more like a what would you say, a demo session. So you have to squeeze
Yes,
in a lot of
yes.
stuff to let people know
Yeah,
what you are going to cover in the mentorship.
yes, 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 exactly. And yeah, since that was my first session, I got nervous, and that's why everything
Yeah.
tumbled. Okay. So when you in this session, I'm involving technicals to properly make you understand what relevance it holds in actual markets. These are not just what I've learned and what I've implemented. These are not at all bookish or not at all theoretical concepts. These I have learned from the books, from various websites, from various sources, from here and there scattered along. And when I got to know them, I was fascinated. But I too was curious at first, like, do they actually work? Do they actually work in the markets? Because if they don't, then it's useless. Then it's useless knowing it in theory terms. So I went on to the charts. I went on checking it in actual markets, and these are actually true. Trend following momentum investing is actually true. You can clearly see it. Hundreds of stocks displaying in uh, uh, display, proving it right. Proving it right is the right word. Yeah. Because most people don't know how stocks move, what they end up doing is they end up, let me show you. Yeah. So what happens is uh, when a stock is moving, okay, just one second. Yeah. So let me show you. Okay, a stock moves up. Okay, and people buy it. Okay, suppose you buy it. Okay, and what happens is that it's when after you bought it, some the following days it starts going down, and you sell it out of fear that it is going down. Okay, and once you sell it, what happens is it goes up, and then you again end up buying it, and after you bought it, it starts again falling down, and the same continues. Why? Because you don't know how the stocks move. So this is what most people end up doing. This is what and fear makes us do. You bought it here, it starts going down, you sell it, and once you sell it, it starts going up, and again you buy it out of fear, and again it comes down, and again you make a loss. So this is what you do. Okay, and the worst thing I've seen many people doing, which even I was a victim of, is that uh, stocks which have crashed or which are undergoing a crash, and just a second. So suppose say this is the 200-day moving average. Okay, I've repeatedly told people that not to buy stocks which are below this, and uh, let me show you. Okay, a stock which is under here, it suddenly crashes, and it and when it is oversold, this is oversold region. Okay, it has a temporary short rally to this point. Okay, what most people do is they buy here thinking that it's going up and all, but no, it's just a short rally. It keeps on going down, keeps on going down, and keeps on going down here. Okay, I'll show you an example of these things. For example, Silicon Valley Bank. Okay, this was a huge company which crashed in the US. Okay, you can see this red line is 200-day. So so what happened here? You can see here it went below this line. Okay, it's in a downtrend. Clear. You should avoid these stocks. This is a temporary rally. Okay, this is a temporary rally where most people will buy, thinking that it's a good stock or etc. And look here, what happened? It started going down. Okay, it got delisted because of this one. Okay, so you should know how a stock moves in trend in order to avoid such mistakes. Okay, next, I've covered it in the previous session, but still, what makes a stock move? Okay, now what retailers like us, what people who are new to the markets or people who have been trading in the markets, or generally 90 to 95% of the people think, what makes a stock move? The common answer is company should be making profit, or their earnings and sales should be increasing, or it should be a good company, या फिर जियो अनाउंस हो गया, या फिर it should be AI which I mean it should be having a future scope, future aspect, वगैरह वगैरह. You can keep on hearing that, but I'll tell you it's completely false. Your fundamentals, or whatever these things are, these profits or these I'll show you with proof why these things don't matter, and why you don't have to break your head in knowing into all those fundamental figures. And with utmost respect to those who are doing fundamental analysis, I don't mean to disrespect or anything. They are good. They work in the long term. They work in the long term. What they don't work is for us who want to beat the index and make uh, good returns by beating the index consistently. They don't work in concepts like they work fine in fundamentally blue chip companies like HDFC Bank हो गया, Infosys हो गया, TCS हो गया, या फिर Larsen and Toubro, L&T, or HAL, Hindustan Unilever, and etc. etc. Once you know those like famous stocks, right? So the fundamentals works good in them for a long term perspective, like 5 years, yeah, 3 years, etc. etc. Where you can. do your investing and all. For us, no, it doesn't make that fundamentals does not make sense. I'll show you. What really moves a stock is the supply and the demand concept. It's simple. It's like in an auction. It's like you have found a diamond, okay, and betting go, and in the auction they bet. So the more rare the diamond is, I mean, uh, the more demand is for that diamond, the prices keep on going up. Someone bets it for 100 crores, another one like raises it to, is willing to pay 120 crores. So what happened? The price of that diamond moved up. Now the next person who is betting it, if he bets it for 160 crores, it price again went up. So when demand is greater than the supply, the price, this same concept is, I just gave an analogy, the same concept works in stocks also, okay. The price goes up when there is demand for that stock, when there is a demand. And when does the price falls? When there is a lot of supply as compared to the demand, when there is a very little demand for that as compared to the supply available, okay. So this makes a stock move up and down. So um, this is the basic funda. And uh, okay, one second. Yeah. So this makes a stock move up or down. Okay. Now, why I don't invest in large cap stocks is their size is huge, man. They there, if you search about Reliance, Tata Motors, or etc. etc., you can see their market capitalization is in trillions. Okay, in trillions. So moving their price up requires a lot of demand from those who are buying it. You can imagine moving value worth 1 trillion or 11 trillion is so much difficult than moving a stock whose value, I mean, whose market capitalization is in billions or even in millions. You can get the picture, right? So the stocks which are having less market capitalization, which are the mid cap and the small cap stocks, even with a little demand, their prices tend to go up rapidly. So, which is why I invest in uh, stocks which are having market capitalization of 10 crore to 100 crore. Between these, I have filter for it. You can go to the screener website and I screen stocks based on, I mean, the most basic filter I apply is that stocks having market capitalization of 10 crore to 100 crores. So this is the just the base, what you can say, base filter which I apply. Uh, because the concept behind is it. I'll show you the practical significance of it. Okay. For example, Hindustan Unilever. Okay. This is a relatively like blue chip and good stock, but you can see how much of a slow mover is it. This is May 2020. From there, it moved only till here. Why? Because it's such a large stock, man. It's such a large stock. I mean, it's a huge company, one of the most profitable ones in India, who have hold a major dominant market in India. Like they have various products, as you can see in your grocery stores, like Colgate ho gaya, yeah, like majority of the groceries and items, they hold the major market share. But still, you can see it's such a slow moving stock because it's such a huge company. uh, Even Infosys and HDFC, yeah, for HDFC Bank, uh, you can see these such a slow mover. You can see, for example, even Reliance Industries. These are like blue chip, very sound companies, safe investment bets, you can say, where you can bet on them for, I mean, long term, but they are such a slow mover, as you can see. And also you can see it is in a sideways, this one, until it clearly crosses this region. It's still in a sideways wala. So you can see from the Koid lows, it's moving so slow. Its movement is so slow. On a daily chart, you can clearly see it's this one. I mean, yeah, you can see here just 2% up in a day, even 3 point this much. This is such a slow movement, such a slow and steady movement, you can say, because Reliance ka market cap is 15.65 trillion. You can see here 15.65 trillion. It is even Hindustan Unilever 5.89 trillion. These are in trillions, which is why it takes so much. They struggle to move, man. They literally just struggle to move. Even Asian Paints, it is giving here. Asian Paints, ITC, these are all huge companies. So, which is why they don't give moves like these. I'll show you what moves I want. Just let me delete it. Okay. Let me delete this. Okay. Yeah. They don't give you moves, fast moves like this. How much it is? 172% in how much time? August 2022 से लेकर December 2022. You can say within a 6 months, the stock almost more than doubled. 172% का मतलब है 200% का मतलब है your capital 3x. So you can have a fair idea. 100% means your capital doubled. So you can have a fair idea how much movement this is within months. These are super performance stocks which I sorry which I'm interested in. I'm interested in stocks like these mid cap stocks. You can see why did it give such a good move? Because you can see here its market cap is in just a billion. How much is a trillion and how much is a billion? Which is why even a small demand from the institutions will make such a huge up move. It did not just move in previous year. Even in this year it gave such a fantastic move. I'll show you 145% from April till wait sorry from June till September. You can count the months. 145%. Why does it move so quick? It's because, and why do these uh, big blue chip companies move so slow? It's because of the market cap. It's because of the demand and supply concept, which is why we are interested in the company in the mid cap and small cap, because they give a good consistent profit to us. Stocks, investing in stocks, or you can say trading in stocks like these, help us beat the index. You want to beat the index. You won't be able to beat the index if you make safe bets by trading in huge, big, large cap companies. I mean, of course, you can if you're someone who is a long-term investor who is okay with that type of returns. For not for us who want to maximize our returns in a relatively short period of time. So this is the idea behind it. Okay. Now, one more very important concept. Stock prices are not determined by companies' past profits. They are determined by companies' future profits. Okay, so I'll elaborate on these points. Why fundamental analysis has such a major flaw, I will tell you. Because the overall stock market and stock prices, they do not move on present value. They do not move on the past, what you can say, past performance of a company. They move on future predictions. If uh, what I mean by that is, I'll show you a live example of even this one. Okay, what I mean by that is, suppose you go to screener.in, or suppose you look at the fundamentals of a stock which is having good profits, which is having their revenue is increasing, they are doing fantastic well in their business, and etc. etc. But still. Uh, you do not see its prices rising. uh, Someone in in the Reddit recent, I don't remember that name of the stock well. Let me try to remember it. It was mm, he asked me that wait, some he asked me about maybe it was HDFC or Uh, yeah, yeah, it was HDFC. Correct, correct. I remember it now. Yeah. So a week ago or so, someone asked me, HDFC is, you can go to Skinner.in and check its fundamentals yourself. It's having excellent fundamentals. I mean, they are doing so well in Indian markets. They hold such a major share after SBI um, in the Indian banking sector. Still, why has it underperformed as compared to these, as compared to its peers, as compared, you can see its movement as compared to IDFC First Bank or other banks like I think Axis. He had asked, yeah, why
I
has
think even,
HDFC?
Federal Bank has outperformed HDFC.
Yeah, 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 exactly, yeah. So yeah, IOB, yes, 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 I remember. You said this one only, right? Indian Overseas Bank.
Yeah, yeah, Indian Overseas Bank. Exactly, exactly. I remember.
Yes, 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 exactly, exactly. You can see all these lines being drawn when I wanted to trade in this. Okay.
Yeah.
Yes, I was tracking this like back ago. Okay. Yeah, you can see like even small banks like this, or you can say like moderate banks, they have outperformed HDFC and all. He was asking me why HDFC के प्रॉफिट इतने अच्छे है, वो डोमिनेट कर रहा है इंडियन मार्केट को, एंड इट्स सच अ गुड बैंक मैन, एंड why has it failed when compared to its own peers, when it's compared to own banks which are not even doing as great as this, which are not consistently posting profits? It is because what profits and what fundamentals you are seeing in your screener.in, or your what you can say, whatever fundamentals you're seeing now, it doesn't matter. Stock does not move based on that. It doesn't move based on past or present, this one, what you can say, fundamentals of a company. It moves on the future, what you can say, future profits or future possibility what the company can do. So that is I will show you one classic example. One more thing I wanted to mention, you can say fundamentals like P ratio is very famous when a beginner is in a stock market. I did a huge mistake by by checking P ratio and believing in it. It's such a overblown concept. I can tell you, it doesn't hold any significance. It's just scrap it. I would say literally. I'll show you why it doesn't matter. Why those fundamentals doesn't matter. Yeah. Uh, Adani Green. Yeah. So you can literally go in screener.in or whatever website you use, and you can check it at around this point, around November 2019, or even around 2020 के time पे, or even after 2020, I mean June 2020, यहाँ के time पे company had negative cash flows. I'll tell you literally, it had negative cash flows. It had some debt. If you look at its fundamentals, it was pathetic. I'll tell you. I mean, if you go and show this to any fundamental investor during that time, what he or she would say is that कंपनी कुछ कर ही नहीं रहा है, इट इज पोस्टिंग सच नेगेटिव रिजल्ट्स, और यू कैन से खराब है इतने इसके, यू कैन लिटरली गो एंड चेक इट योरसेल्फ. It had such a bad fundamentals. Having such a bad fundamentals, even even though having such a bad fundamental, stock gave whooping 3000% returns within a time period of 3 years. 3000%. Can you imagine? From October 2019 till here, till April 2022, it gave 3000%. Can you imagine what 3000% return is? 100% return means 2x your capital, which means 10,000. I mean, which 1000% return means 11x your capital. So 11 is a 33. 33 times your capital. If you had invested just 1 lakh, it would have become 33 lakhs by now. I mean, 33 lakhs by 2022. Uh, This is the amount of move it gave, even having poor fundamentals. No fundamental investor believed in this stock. I'll tell you why. Because it does not move based on the current or past, you can say, profits, or what the company is doing. It moves based on what the company is going to do in the future. It had the green energy theme. The institution predicted that they were interested in green energy, in go green. I mean, you can say renewable sources. So they might have bought this stock, but their buying affected it so much. You can see here 3000% within 3 years. These type of performance you're looking for. So you can go and check after the session the fundamentals of this. You can study it around 2020 time. After it had so poor quality fundamentals, so which is why fundamentals does not matter. It doesn't care about um, fundamentals. Let me check this one. Wait, this, wait just a second. This, it was make my, I can't remember its name. I can't remember the name of the stock properly, but if I get it, I'll show you that. It was it was a tourism company, tourism booking company, like book, yeah, you can say like Make My Trip, or these online companies, like book my hotel, like you get the idea, right? I'm not able to recall its name. Okay, that company, during COVID time, I had observed it. um, what one would think fundamentally is that COVID आ गया. It was around May June time in 2020. COVID आ गया. अभी कोई भी नहीं tourism जाएगा. I mean, like no one would go to travel and all. So no bookings, and these tourism based companies will suffer a lot. Their stocks will go down, or you should not invest in them. This is what fundamental reasoning one would do during that time. But I literally saw it on the chart. If I get it, I'll share it with you. I'm not able to recall that name. The stock gave literally around 80% move within around 6 to 7 months, I would say, during COVID time. Even though it was a tourism company, it gave that, which means that the fundamentals doesn't matter. What you think about that company, क्या होगा, it does not matter. What the profit it is showing you right now, it literally does not matter because of this. So the only way to know that is by analyzing its price action. Stock, you won't get to know about the what the stock is going to do by reading its profit reports, or studying about the company. It's no requirement. You only need to see the charts. You only need to see the price action, what it is doing. So that's all that matters. Okay. Which I've noticed is people questioning based on fundamentals, like here, what's up with the defense stocks like HL, Mazda, Cochin Ship? They have been like blasting like anything. Okay. See, one thing I'll tell you, if you keep finding a reason why is this going up, what, because they can't see anything fundamental change in the screener website or in that particular stock. So they try to question like what is happening, why is it like bursting, why it gives such an up move. There is no news also about it, there is no fundamental uh, which is affecting that. So see, I'll tell you, the news and the fundamentals, they always reflect later. The price moves first. The stock move first. Later, the fundamentals will appear in the in that company's this. See, if you keep on questioning this, you will miss out on the huge rally. Okay, I'll tell you, I made very excellent gains in these stocks. They were all in my watch list. Okay, where is that? All the shipping stocks and railway stocks, they gave a huge, you can see here IRFC. Okay, so yes, you can see here, bought it right around here, and it gave me it gave me humongous up move. Okay, it's up by 100%. I was able to catch a major chunk of it, even RVNL. Okay, see, such a good up move here. Yeah, again it set up again. I did a little bit of swing around here. So, and shipping stocks, Cochin Shipyard, I told you I had failed. Yeah, wait 1 second. So what I've observed about most people is that they, since you depend on the news, since you try to gauge the fundamentals, you miss out on the huge rally. You come to know about these stocks when it has already made such a huge up move. You are getting to know the names of these stocks around here or around here in 5 minutes. When people, when smart people, or when people who are momentum based traders, they were tracking this stock right around here. I had actually got into it right around March end, at the beginning of April, but it gave me a loss. I was still watching it, it was still in my watches. You can see I have plenty of stocks here, so I don't remove them. I keep an eye on them, which are setting up and all. So when it set up and it broke this, I was in it. I entered this stock. Yeah, I was in it, and it gave me a very good profits. Okay, so you should always, previously also, last year I had got this move, a major chunk of it, and sold it around here. Yeah, so you should be tracking it. You should not wait for the news. If you wait for the news, you will miss out on all these good moves. I'll tell you. This one also, GRSC, this also belongs to shipping sector. Yeah, I bought it around here, and you can see it gives such a amazing move. Even Masgon Dock, yeah, even this one. If you kept questioning the fundamentals, yeah, you can see here, last year I traded this. If you keep questioning the fundamentals, you will miss out on this huge rally. Yeah, you can see this line. So this rest, it breached this line, and I had entered it, and I sold it for negligible amount of profit around this time, because it broke my rules. I had to sell it, and when it again set up, I again re-entered it, and see, and look what happened after that. Yeah, I added a bit more around here. So yeah, look what happened. It burst like anything. It's 145% up from that point. If you keep questioning, if you keep checking the news or fundamentals, you'll literally miss out on the huge rallies that happen. Like even here, you can see huge rally. You won't be seeing any fundamental. And yeah, this one was a major profitable one for me. Titagar Rail Systems, yeah, huge up move. Yeah, I captured major chunk of it. Yeah, it was showing very good relative strength even during bearish times here. You can see here January 2023 to February and March, when the whole market was going down, when it was in a bearish mode, this was the stock which was making new highs. It was showing me relative strength. I was already tracking it, and when it broke around April here, I entered it, and you can see what happened. And I didn't sell it early. I always ride the trend, you can see. And I sold it recently when the market turned a little bit bearish. Yeah, you can see, was able to catch such a good chunk of it. because I maximize my profit of by not selling in too early and not focusing on the news or the fundamentals. I don't look for them. I solely buy based on my criteria. Yeah. So this is why it's so important. And the next one, okay, the biggest myth. Okay, I'll also show you the proof for that. Okay, a good company, it's contradictory what we think. A good company does not equal a good stock. What, when we first enter into the markets, what do we think is that to and what do we hear? Maybe you can relate to this, or so what people give advice in the internet or even in person, or even your friends or etc etc, is that जो कंपनी के प्रोडक्ट्स तो यूज करता है डे टू डे बेसिस पे, जो you what you can see frequently around you in the markets and all, uh, invest in such a stocks. For example, I have heard people like, I see a lot of Seat or MRF tires in the garages or in the vehicles, so I invest in them. I see Colgate, uh, I use Colgate daily. The relatives I know use that. Many, like 9 out of 10 people I know use that, so it's very popular, I'm gonna invest in that. Or uh, even like Reliance Communications, like what like it's famous. Or you can say Airtel. Airtel is dominating the market since past what you can say 10-14 years. So I'm gonna invest in that. And classic example, Coca-Cola. Like it's the most profitable company, I'll tell you, in the beverages industry. Coca-Cola, it holds a major massive share. It's such a huge company, I'll tell you. Okay, but let me show you the reality. These are all good companies, fundamentally excellent companies, I would say, but they do not equal a good stock. It's a myth. I'll show you that. Wait. And another tip I'll be giving you, just to remind me at the end of the session, just to remind me by saying that NSC, BSc. Just remind me if I don't tend to forget. Just a little tip. You
Okay,
remind
okay.
me by saying NSC, BSc. Okay. Yeah.
Sure, sure.
Yeah. Okay. Airtel. So this is the chart of Airtel. It literally like did excellent. It was in a huge competition with BSNL in India from, you can from like the past decade. It's a very you can say very good company in terms of communication services and all. But what did the stock do? Ever if you had invested it in 2007 and checked your account, you would have gotten zero returns, zero. Or hell worse, if you had checked your checked that investment in even prior to 2017, you could have gotten negative returns. In 2017, it did went back to that same level. So 10 years, zero returns. 10 years, zero returns. You can see. I'll just this region. You can see right from year 2007 to 2017, zero returns. Zero returns by an excellent company like Airtel. If you had listened to the news or whatever your friend says, या फिर खुद एयरटेल का सिम यूज करते होगे, या फिर you would have betted on the based on the company's performance in its stock, you would have gotten zero returns or even negative returns. If you had this is not just your capital getting locked. Okay, this is the huge loss to you, more than what we can see in the chart. It's a huge loss. If you had put that money in Nifty, it would have grown by it would have doubled, or even it has actually four times. I will tell you, it has 4x Nifty, I guess 3 to 4x from 2007 to 2017. Yeah, at least double तो हो ही गया है. Okay, and if you had put it in this one, zero returns. It did not even it not only cost me time but opportunity cost. Let me show you, for example, uh, this one, Coca-Cola, one of the biggest shareholders, I mean, market, I mean, dominant uh, company in beverage sector. Yeah, what can you see? Right from 2013 till now, it has not even reached to that same level. Coca-Cola X, oh, wait 1 second. NYSE है ना ये, न्यूयॉर्क स्टॉक एक्सचेंज का, या just a sec, there are too many like foreign indexes, so I'm just making sure. This one, it was this itself, yeah. Okay, Coca-Cola ka like chart, if you see this New York Stock Exchange, yeah. So such a good company, but it's going down ever since 2013. It's not even like it's not even back to that same level, even though it's an excellent company. Excellent, by I mean in terms of company wise. ITC move कहाँ से देना शुरू किया? It started after 2022. From July, from 2017 till 2022, it literally underperformed the market. Underperformed literally. If you had invested here, you would have gotten zero returns here. So a good and ITs will tell you excellent, in you know what the products they deal in. It's in Indian market. It holds such a good value as a company. It's a very good company. I would say company wise, profit wise, management wise, and sales and those things. It's an excellent, but still it literally underperformed in 5 year period. It only started going up after this. And what was that other stock? Reliance Communication. Reliance. Where is that? Com- Reliance Communications. Yeah. Look at this. What you can see. Oh man, it has fallen so much. Yeah. Oh, it still has gone. Oh man. And yeah, what you can see here. Right after 2008 till now, it's a penny stock now. Reliance Communication, penny stock. You can see how much has it fallen, though it was such a good company back then. I mean, after अनिल अंबानी का जो हुआ, वो डूब गया. I mean, the companies which are under him. But what about before his mistakes, before his what you can say, his uh, uh, I mean, before he did mistakes, before the management or the company, this thing went well. Why did such a good company trade at such, kept on going down? Why? Because the institutions were not interested in it. It's a simple answer I can give you. It does not matter how good a company is, Coca-Cola or Airtel, or you can check up even like excellent companies who they have given negligible returns or sideways returns or even underperform the market. If it was such a good company or प्रॉफिट वगैरह सब कुछ अच्छा ही था, फिर भी इट अंडर परफॉर्म्ड. इट शुड हैव वेंट अप एज पर व्हाट वी थिंक अबाउट stock markets, right? It did not. This is the biggest myth. This is what most people fail to understand. What we try to do is we try to find a good company. We try to find company which is doing good in this market. Matlab, yeah, one more thing I remember. Yeah, this one, Paytm. मतलब डिजिटल इंडिया का इतना हाइप था when it was launching. Yeah, you can see here in नवंबर के टाइम में आईपीओ लिस्ट हुआ था ये. ओके, literally it had so much hype because Modi ji, uske, like after some time, he had announced. I guess he had already announced about digital India. Even many people knew like UPI, and UPI is gonna, like it's going to, what you can say, dominate the market. Many are going to move from cashless to UPI, and they did. They actually did. You can see we use digital payments now. How much it has been, but still, why did Paytm like the stock literally, like you can see, it went in such a downtrend, and it has it has still not rose back up to this high level, which is still, what you can say, 200% down from its from where it has listed. I remember when it was launching its IPO, his the company CEO, I don't remember his name. He told that we are launching this IPO at a such a low cheap rate, even though we believe that its actual value is so much more. It's such a he had given that statement. If I try to find it, he had not this one. Uh, he had given that statement, man. I can't remember it. Wait. Anyways, if I find it, I'll share that. It has like many news like comes up now, so it has gotten down. I still remember what he had told during this time, that the value of Paytm is so much more, but we are launching it at a cheap rate. He had given literally exact these comments while launching it, एंड क्या किया मार्केट ने आफ्टर इट लॉन्च्ड, इट केप्ट फिलिंग, और मार्केट ने उसका ट्रू वैल्यू दिखा दिया यहाँ पर. इट्स ट्रू वैल्यू इज एज शोन बाय द मार्केट, not what a what he believed in. Yeah. So even though Paytm had such a good future prospects and all, it did not matter, because a good company does not equal a good stock, and it's not our job to invest in good companies. No, our job is to make money, not to analyze or seem intelligent by studying these fundamentals and all. I've seen so many people like they read out these big earnings report. Yeah, ये ROE का इतना है, ये डेब्ट नहीं है कंपनी में, ये कर रहा है, वो कर रहा है, एंड एक्सेट्रा एंड ट्राई टू सीम इंटेलिजेंट. Yeah, you may seem intelligent, you may seem knowledgeable and all, but if you're not making money with that, it's of no use. It's of no use. The only thing that matters to me is if it's a good stock or not, and I'll tell you what is a good stock. A good company does not mean a good stock. Our job is to find a good stock, like you can say Masdoc. I shown you in the charts, I guess, recently. Masdoc, which gave humongous return in such a short period of time. I am looking for these kind of stock. It doesn't matter the fundamentals of that company or what that company does. It does not matter to me. What matters to me is if it's a good stock or not. I'll tell you what is a good stock or not in the upcoming slides or time. Yeah. So my job is to invest in a good stock, not analyze the company. The company does not matter to me. Even if it's selling some slippers, it does not. I mean footwear, or if it's a poorly performing company wise, it does not matter to me as long as it's a good stock. As long as the stock is in uptrend, it's showing good growth. It does not matter to me the fundamentals of the company, or uh, what you can say, this one, wait, and cannot remember it. Wait, Phenolix, no, it was Vinyl chemicals, I guess. Yeah, I had actually took a trade in this during last year. Yeah, wait. When it broke this line, yeah, vinyl chemicals. I didn't knew what the company does. I'm least bothered what it does. It does not matter to me. Or I hadn't even heard about its name anywhere. It just came on my scanner because it was fitting my criteria and it was rising up. So what I did was I simply bought it based on my buy criteria. I'll be discussing it to you in detail, in depth, in a particular session in the upcoming one. What is the buy criteria, what is sell criteria and all. So yeah, it fulfilled my buy criteria and I bought it, and you can see the amount of returns it gave from here till here. 200%. You can 200% you can see from how much time? From July till September. Wow. An unknown company whose fundamentals I did not even knew. I actually did not make 200% on this. I mean, you can't exactly time it like buy at the bottom and sell at the top. It doesn't work that way. And our job is not to pinpoint it also. Our job is to catch the majority of the, what you can say, majority of the move, majority of the trend. So I made a decent around uh, what you can say here. Yeah, around 85% I made it that time. So even a part of this up move is so much enough for me because from July till September it uh, it gave me such a brilliant returns that it's near 2xing my capital. Yeah. So these are the kind of stocks I'm looking for. Good stocks. I'm not looking for a good company. So why am I explain spending so much time in I mean, this these all might bore you, or this thing, since this session is designed for that itself. I mean, for getting you a good mindset of what to keep in mind while going ahead in your stock investing career, or in I mean in journey. You need to keep all of these things in mind, because these traditional things would have fixed in our mind in such a way that it's hard to get rid of them. I mean, it was hard for me in the beginning to accept these things, to to actually grasp these things. As and when I went on, it became clear to me exactly. Yeah. So why am I stressing so much is because you need to keep this, you need to build your mindset in this fashion to maxim this will maximize your returns and avoid investing in laggard stocks like ITC 5 year में कुछ नहीं दिया, एयरटेल तो 10 साल में कुछ नहीं दिया. Just because it's a good company, it doesn't mean its price will go up. Even though it had excellent fundamentals, Airtel, you can go and check. It does not matter to me. I mean, it does not matter that matter to the institutions that they will buy it and its price will start going up. It does not matter. It does not matter if it's a good company. Okay, I spent too much time on it. Sorry. Yeah. So, are you? Did you get an idea? Or if you are having any doubts, you can ask that moment itself.
Yes, yes, I got a fairly good idea. So basically, these are actually these things I used to wonder also. See, I haven't really traded stocks as much yet,
Yeah, yeah,
but I did understand even before that companies, these blue chip companies, they are extremely difficult to move. Like if
yes,
suppose company is worth like 10 crore, I mean the market cap is 10 crore,
exactly.
there has like another 10 crore has to enter that market cap
Yes.
just to double that price.
Exactly, brother. Exactly. Yeah, yeah. You have like got a very good idea of that even from before. Yes, yes. Exactly.
Yeah.
This is what the majority of the people, even you might have seen in your friend circle, or like in general the people you meet on the internet, or they don't get this simple concept. I mean, they don't get this. They start look they only focus on these, like if it's a good company or not. The simple thing is it does not matter. It does not matter what a company does, because उसके बेसिस पे स्टॉक प्राइस मूव नहीं हो रहा है, तो मैटर भी करना क्यों चाहिए? ओके, सो दिस इज द थिंग, एंड I have literally read like so many posts, even in like I am a part of like r hash investing r slash investing subreddit, which is global. I mean US का participants है उसमें, ज़्यादा ज़्यादा के ज़्यादा. Even there I get recently I got the post. He said that why is Disney डिज्नी वॉल्ट जो कंपनी है, आई मीन ऑब्वियसली इसका इंट्रोडक्शन तो मतलब देना चाहिए नहीं, बिकॉज इट्स I mean the cartoon shows you watch, I mean we used to watch, or Walt Disney, like such a big production of movies के industry में. He kept on asking me like ये it's posting, it's a good company, मतलब सब अच्छा चल रहा है उसके fundamentals में, and why is it going down? He had made a post about this. Why is it going down? Uh, like उसका simple answer है, why is it going down? Because institutions are selling it. Its supply is greater than demand. That's all that is there. If you try to decipher in its fundamentals कि क्यों हो रहा है ये, it will take a lot of time to reflect in the fundamentals, is what I would say. But it's simply going down, even though it's an excellent company, because the institutions don't like it. They are selling it. The supply is greater than demand, which is why it going down. And it's enough for me to know that it's going down to not to be least interested in this stock. You can see, to be least interested. You can even see it's in a downtrend, and you can see how long it will be in a downtrend once a trend is established. I had spoken to you about it, right? Since December 2021, even till now, it's in a downtrend, and it will go on for even more months. Once a trend is established, it will stay in that trend. It will follow that trend for a long period of time. So only identifying trends is so important, so that you don't get stuck into these stocks. Okay, so I hope we have gotten a fair idea about that. Okay, so this is the biggest myth which many people try to defend to. Even when I try to give them like in the comment section, I try to give them like a fair answer, like why is that company going down, or even they are so reluctant, ignorant to accept that fact, that they try to uh, tell me that a technical answer is just bullshit. It will only make you losses. It doesn't work. Charts बकवास है. फंड लाइक कंपनी अच्छी होनी चाहिए, उसका फंडामेंटल स्टडी करनी चाहिए. आई वुड ट्राई टू एक्सप्लेन देम एज मच एज आई कैन. देन आई वुड से अच्छा, यू आर ओनली करेक्ट भाई साहब, तुम देख लो अपना. इट्स ओके फॉर मी. लाइक मेरा पैसा बन रहा है इसमें, आई मीन इस कॉन्सेप्ट से. सो आई एम हैप्पी विद दैट. इफ यू अंडरस्टैंड इट well enough for you, if you don't understand it, तुम जो कर रहे थे, you can continue doing it. Yeah. Don't believe me, you can literally take a look at this one. Okay, this post was uploaded after I had done with my session. This is a post recording. I'm doing it to add a few points. Okay, you can see this guy, 6 years, he was a shareholder of ITC. He had actually bought it. I know so many people who had actually got stuck in ITC. Okay, I'm not bluffing. You might have known some people, or even you might have bought it. Okay, you can see here. Yeah, investment through the years, 66% of it is coming in the last 1.5 years. You can see here in 17 to 18, negligible returns. Even this year, most of the returns came after it was stuck in this sideways fashion. After 2022, this up move came. So this eats up your capital. This is an opportunity cost to me. I could have invested in so many good stocks which are going up, and I could have made money rather than getting stuck in ITC. And ITC, I'll tell you, it's a very good company in terms of it holds a major share in doing in that tobacco business which it does. So you can see here, it's such a fundamentally sound company, still the returns were negligible around this 1 year period, which is why you should look at the charts. You should know what it's doing rather than blindly investing into it. Came across this post, okay, in this one, this US based like subreddit. Yeah, he's asking why is Volkswagen stock down so much if their profit has almost doubled. Okay, excellent fundamentals. Volkswagen is doing good. You can see he wrote it's nearly 30% is down 30% in the last 5 years, despite it nearly doubling its operating profit. Yeah, so even if it's fundamentally sound, it does not guarantee the stock going up. Okay, let's check it on the charts. Volkswagen. Yeah. Uh, let's switch to the weekly time frame. Okay. You can see here. You can see here. Literally, it is down so much. Even after being such an excellent company, it's going in a downtrend. It's in a downtrend. There is nothing fundamentally wrong with it. There is nothing, but it's a fundamental sound company, but still it is going down, which is why I say don't rely solely on the fundamentals. Okay, and let me show you this why P ratio and all is so overrated. It's so wrongly thought among the people. I'll show you. Uh, IRCTC. Okay, I had bought this stock around this time. Okay, when it gave this breakout, I had bought this stock around July 2021. Okay, you can search what was its PE ratio at that point. Okay, it was 120. It was roughly around 120. I remember it. Its PE ratio. Many people, what we are thought that a PE above 30 is highly overvalued. You should not buy a stock. You should buy only undervalued. Okay, it was around 120. If possible, I'll show you now. Okay, so look what happened. I ignore all the fundamentals. I ignore all P ratio and everything. I simply bought it as per my uh, criteria. It gave it it made a perfect cup with handle breakout, and it fit my other criteria. So I had bought it based on that. And you can see what happened. It gave me an amazing move, an amazing up move. If you want to calculate it, how much it was, yeah, you can see here 151% of more it gave. And right around this time its P was 240, 240, double P. Yeah. Even at 120 P ratio, it gave such a humongous move, which is why P ratio is so much misinterpreted. You should not rely on it. Okay. Uh, I sold it around 80% ish gains I had made it, because you can't sell exactly at the top. Okay, so as per my sell rule, I sold it around this region. Yeah. So decent 80% gains I made on this. So let me, if possible, let me check its P. How much is its P ratio? Not this one. Yeah, you can see here the P of P chart of IRCTC. Okay, you can see here. I told you around June I had bought it. Yeah, you can see here around June. How much is the P? 170. Yeah, 170 is the P. And what we are told to never touch a stock above P 30. It's highly overvalued. Yeah, and look at what happened. Such a humongous rally it gave, and its P went to 316. Yeah, 316. So P is not a right metric, and what your thought about the fundamentals is solely wrong. Its interpretation is wrong, which is why I don't rely on fundamentals for my trades. If I had relied, I could have missed this huge up move. Yeah. Okay, so who moves the, you will get a fair idea by this. So who moves the market? It's not me or you. It's not our friends. It's not those rich people. I mean, rich means not crore-patis. I'm talking about some like who invests in like lakhs. You can say like कोई कोई हमारा दोस्तों का जो 5 lakhs डाल देता है एक ही स्टॉक में या 10 lakhs वगैरह वगैरह. दे इवन दे डू नॉट मूव द मार्केट. The market is moved only by the institutions, the big guys. अब ये क्या है institutions? Just a brief within. I mean, you already know it, but just I'm telling you. Suppose like, suppose like you are a like a very very rich person. You belong to the top 5% richest people. I mean 5% category of rich people in India. Or if you're a celebrity, if you're a cricketer, and you have shit tons of money with you, and and you don't know to invest. I mean, even if you know to invest, investing such a huge amount of money will be a problematic thing. So what do these celebrities, and where do they put their money in? Is they approach these hedge funds, या बिग बिग फंड हाउसेस है, जैसे यूएस में जेपी मॉर्गन हो गया, या फिर जेपी मॉर्गन वैनगार्ड करके है. दीज आर फेमस, दीज आर वेरी फेमस. These are big fund houses which deals with like thousands of crores. When they buy a stock, they buy bulk, they buy block via block deals, they buy like they inject crores of rupees into them. So these celebrities, they approach these hedge funds and all. They give their money for those fund managers to manage their money, and those managers take like a 30% cut, or so. Their charges are huge, but yeah, you can get that. So these hedge funds, mutual funds, mutual fund houses, you can see there are so many mutual funds in India, like uh, HDFC हो गया, SBI का हो गया, एक्सिस का हो गया, या क्वांट का हो गया, परक पारिक फंड. देर आर सो मेनी these mutual fund houses who have their uh, pool of money, crores of money. There are FII, means foreign institutional investors. मतलब outside of India, these companies like JP Morgan, Vanguard, who put their money in, who inject their money in Indian stock market. Domestic institutional investors, these, I mean, the big companies which reside in India and they invest in the Indian market in amount of crores and all. These guys activities move the market. Okay, and this is the most important to understand, that we have to always be with these guys. You cannot stand against these guys no matter. So you have to always be with these guys. You have, if they are buying a stock, you have to, I mean, you have to be with them while buying. If they are selling a stock, you have to exit the stock no matter how much favorite that stock is to you. Yeah, you have to never be against them, otherwise you will be crushed. That's the simple way. You'll be crushed if you go against them. Their actions uh, pump a stock's price up, and their actions dump a stock's price down. When a market, even when a market crash happens, why do crashes happen? Because these guys will be selling like havoc during those times, because they will be knowing something which we don't. I'll tell you, this is the fact. These guys will be having some sort of inside information or inside sources which is not accessible to us. They have crores of rupees. They can spend some part of it in getting some information which we retailers won't be knowing. Yeah, and it's a true, won't be knowing. So they'll be buying those stocks based on their resources, which is not yet available to us. And when the news comes out, it will always be too late. When the news comes out, it will always be too late. To prove this to you, to show you, give you an I'll give you an example. Wait. This is NDTV का stock है. Okay. Okay. Let me show you this. Yeah. You can see its previous performance, complete dead stock. Dead stock का मतलब like you can see by its action, like it doesn't move. ऊपर भी नहीं जा रहा है, नीचे भी नहीं जा रहा. Okay. It's complete dead stock, and you can see here. You can see here. Suddenly कुछ तो हो गया. Okay, suddenly कुछ तो हो गया. The stock price rose from being dead, and it started making higher highs and higher lows. You can see here it's making higher highs and higher lows. Suddenly a dead stock started doing this, And you can see here the volumes. You can see these huge volumes. Why I focus so much on price and only volume is these huge volumes cannot be created by people like you and me. They can only be created by institutions. When they buy on huge bulk money, this indicates that volume spike. That's why it is so much important. When I'll be teaching you in-depth technical analysis, you'll get to know more importance of these. So previously dead volume, you can see here previously dead volume यहाँ पर कुछ हो गया suddenly, due to which volume spike with the stock price movement. I mean, stock started to pump up. Okay, and during this time, literally no one knew about this. No one knew about this. Okay, what I'll show you what no one knew about. Okay, so stock price started going up while being dead since so many years. You can see it's been dead since so many years. Okay, since past so many years it was dead, and suddenly kuch to ho gaya, stocks started moving up. Okay, and if you go and check about the NDTV about this time, its fundamentals and all, not impressive at all. Nothing, there was nothing. It was just जो काम कर रहा था वो वही कर रहा था, मतलब न्यूज का जो है ब्रॉडकास्टिंग एंड ऑल, it was just doing it, continuing its own work. There was nothing about special about this. Okay, okay, and it literally gave from February 21 till September 21, September 2022. Within one period it gave 1000% returns. A complete dead stock gave 1000% returns, which means 11 times the money you put in there. 10 lakhs you put, you will be getting 1.1 crore. This type of humongous move it made. Okay, and I'll tell you why. Why did this move happen? I'll tell you. Why did this move happen was that this is the reason why it happened. Okay. अदानी ग्रुप acquires एनडीटीवी. एनडीटीवी पे अदानी ने डिसाइड किया कि this much percentage he'll acquire it through indirect. He actually bought another company which had control of NDTV. Okay, so indirectly he gained access of NDTV. Okay, this he did. एंड यू कैन सी दिसंबर 2022 में ये न्यूज आया बाहर. ओके, दिसंबर में आया. दिसंबर, यू कैन सी एवरी आर्टिकल स्पीकिंग अबाउट इट इन दिसंबर, एवरी सिंगल आर्टिकल. ओके, और ये तो ये बहुत लेट पब्लिश किया है ये. यू कैन सी 2022 दिसंबर में न्यूज आया कि अदानी ने ये सब किया. लेकिन क्या हुआ 2022 के बाद? इफ यू हैड सीन द न्यूज एंड अदानी खरीद रहा है तो ऑब्वियसली जाएगा ऊपर, तो हम भी खरीद लेते, लाइक वी रिटेलर्स थिंक लाइक दैट ना. एंड इफ यू हैड इन्वेस्टेड इट, व्हाट वुड यू नो, कहाँ पर है दिसंबर? या दिसंबर इज अराउंड हियर. लुक व्हाट द स्टॉक हैज डन फ्रॉम दैट. The stock had was previously accumulated by institutions over a period of year, and they were dumped onto the retailers when the news came out. This is literally what happens. I'll tell you. This is a dark secret of stock market, and this literally what happens. They had been buying. मतलब तुम्ही सोचो, like a complete dead stock. What must have happened for them to so curiously buy these amount of price movement is not attained by you or me. It can only be attained with these much of amount of volumes. And 1000% कोई stock का price ऊपर कर सकता है तो they are the institutions and no one else. They had been secretly purchasing this because they might have known the news even before. They have insiders, they have their sources, legit sources, because they have so much money, they control everything. So they had been accumulating it uh, since a year, and when the news came out, it was dumped onto the retailers. And you can see where is it now. It's like it's so much down. It's so much down. If you had bought it based on the news, that's why I never invest based on news. दिसंबर का टाइम यहाँ है, कितना गिरा, लिटरली न्यूज आने के बाद गिरा वो स्टॉक. This is the exact reason why I don't trade on news. So this is the one of these things. Who moves the market is the institutions. They have their insider sources. Okay. uh, so this was that. Okay, only a few slides left. Are you okay if I take for a few more 15 minutes or so? I mean it.
Definitely, definitely.
Okay,
If you
okay.
are okay.
Yeah, yeah, yeah. Okay. Yeah. So, okay. So, these, okay, one second, just let me, yeah. Okay, yeah. So we are clear with this. So one more thing I wanted to tell, these things no one talks about because majority 90% of the people they don't even know कि such thing होता है. Such manipulation, such news based fallacies, they literally happen in the stock market. Why? Because stock market is literally designed to take money from the retailers and give it to the big guys. It's literally designed in that way. The money is controlled by these guys. That is why majority of the people make only losses. Majority of the people interested only in intraday, only in making quick money, only in FNO. They incur these many losses due to this. And who are the guys who are making profits? They're only these hedge funds, only these institutions. So yeah, and yeah, the golden rule. How safe are the safe stocks? This is such a important statement. Okay, let's analyze this. How safe are the safe stocks? By safe stocks, we can say Reliance or US markets में हो US markets में if we think it's the FANG companies, FAANG, Facebook, Apple, Amazon, Netflix, and G, Google. How safe are you have heard people investing in them, matlab, like multi-billion dollar companies, so they are the safest ones. So people tend to buy them, right? I'll bust a myth now that no stock is safe actually in the market. If you don't have proper rules to get out when it goes against you, no stock is literally safe. There is no stock where which you can buy and hold, or you can say buy and forget. The people keep talking na, मैं long term investor to 10 years or so, I'll just buy and I'll just forget it. Literally such a dangerous concept. I'll show you. Netflix, okay, multi-billion dollar company Netflix. And what happened? See here, stock fell by more than 250% from its peak. And in how much time? From November till May 2022. November 2021 till May. Literally, even in couple of months, fell by 250%. This is not, if it was a mid cap, small cap company, I would have understood कि हाँ यार इतना volatility होता है, like I mean like company basis पे and all. But net expecting this from Netflix is like shocking. It's like you can't even believe. Matlab, the people who would have invested in Netflix or like Google and etc etc, thinking that it's a safe stock, 250% down, boom. And I agree, now is it's slowly trying to recover, but it's still nowhere near the way it was in 2021. It has nowhere reached its peak. And I don't even think if it will reach its peak in any time soon. I mean, maybe next year. I mean, so much time wasted, so much money wasted, which is why no stock is safe. There is literally no stock. I'll show you one more popular, Tesla. Literally, you can see Tesla by how much. If you had just buy and forget concept, how much percent is it down to? 80%. It's down from its peak to 80%. Stock like Tesla, how much sales, how much hype Tesla had, how much of self-driving cars, and you can say like you have obviously heard about it, right? How much it had. And if you had invested thinking, and I know many people who had invested in this thinking that Tesla मतलब अभी like future तो इसी का है, मतलब like electric cars and this how much it fell? 250%. It has not even reached back its all-time high. It's still so much below. E- Even most profitable company like Tesla and all, you can go check its fundamentals. It has Elon Musk's capital, you even know he became the richest person. Uh, Obviously, he has shares of Tesla. He became the richest person. You might have think. I mean, the fundamentals of this company were excellent. You go ask any fundamental investor. Okay, so, but what happened? Its price plummeted by a whooping 250%, which is why no stock is safe. I'll show you Indian examples of this. Yes Bank, perfect example. Yes Bank. Okay, you can see it's a penny stock right now. It was one of very good bank back then. You can see it was in an uptrend because it was such a good company back then. What happened once कुछ गलत होने लगा कंपनी में, so it reflected in the stock का ये even before the news would like come out. And you can see here, you can see from 300 it went till negligible. You can see negligible. Even I still have can find people who bought it around here, or who invested in here thinking that all time high से गिरा है इतना, मतलब it's available at such a discount price. To me, this concept is such a wrong thing, because a stock which is going down will keep going down until you have no idea. It will just keep going down, which is why I don't buy or even touch stocks which are in a downtrend. It is a wrong concept. You can see I can even what you can say, people still ask me like, yes bank, like I've lost almost, मतलब what I had invested, I'm उसका सिर्फ 10% रह गया है अभी मेरे पास. Should I sell it, book a loss, या फिर I keep on holding it for another 10 years, so that it price will come back to this level? I mean, I don't even know what to answer them. A quick glance at the chart would have answered everything to you, my friend, would have answered everything to you. Yes Bank was such a, it was darling of the stock market, you can say, back then, because not only being a good company, it was in a, like good uptrend. But anything can happen. This is the concept why there is no safe stock. This is why I sell if immediately at a 10%, maximum 10 to 12%, you can say loss. Even if if it goes against me, I do not question the market. The market is supreme. No one can, only the market is right. Okay, so you have to sell it quickly. uh yeah. So there is, and yeah, I forgot to show you one interesting thing. When this fell, na, what you might have think is like institutions majority money hold करते हैं इस पे, या फिर promoters of this yes bank, मतलब company, like उनके founders, उनके promoters जो है, उनका loss हुआ होगा, like इतना सब कुछ गिर गया. I will tell you no, because they are smart people. They wait. I'll show you their the pattern of the shareholder pattern. Okay, yearly pay. Okay, March you can see तो 20% था promoters का, कितना आया 0%. 0% पे आ गया वो. ओके, FIS, DIS, as I told you, institutional investors, their percentages went from whooping 40 to only 1%, which means they sold everything. They sold everything. Even domestic institutional investors, domestic ने इंक्रीज किया, मतलब इंडियन का ये है. बट still the foreign institutional investors matter more than domestic, because these they have, they invest more rather than DIS. Okay, because in dollars, their hedge funds like JP Morgan and so. Okay, and you can see public का pattern. Public पहले 5% होल्ड करता था. they literally they increased it, thinking that buying it at a discount is good. And you can see what happened to the stock. The promoters got out. Who are the ones who got trapped? The public, the retailers like us, because the buy low sell high concept has been sold so much that they believe in that like wrong psychology, and they keep buying beaten down stocks. They think that it is a discount. No, my friend, it's not a discount. It's a clear indication that you should stay away from a stock, because of because of this. All these institutions, they offloaded their shares onto the retailers. You can see here. I'll show you one more example. Future retail, बिग बाजार का जो है, okay. So stock made a give a IPO based breakout. I'll teach you this. What is this? You can like easily trade such stocks. IPO based breakout, and it like gave a humongous move, and after which what happened? It started going down, and literally it's in pennies right now. You can see pennies pe hai ye stock. The people who had bought it thinking that it has fell so much from its highs would be so much happy, right? Like मतलब यहाँ से मतलब ये 500% डाउन है, so इतना डिस्काउंट पे मिल रहा है मुझे. Such a false concept, my friend. It'll go even 500% down. It'll go even 500% down till it reaches zero. There is no limit to it. And I'll show you the shareholding pattern of this. You might have think that like majority institutions से इनका नुकसान हुआ होगा. Okay, I'll show you that. See here. You can see promoters का percentage 40 से 30 हो गया, 28 हो गया, 20 हो गया, 19 हो गया, kept on going down. एंड एफआईएस का देखो, मतलब इंस्टीट्यूशंस का देखो, 13 12 था, 10 था, 4 हो गया, 2 था, आई मीन लाइक 2% हो गया फ्रॉम 13%. These will be in crores, huh? These may be looking small in terms of percentage, but these will be in crores. These affect a lot. 15 था, 14 था, 12 था, 6 था, और like they cut it from 15 to 6%. और पब्लिक का क्या हुआ? As usual, 23 it was, and 36 it went, 55 it went, 63 it went, 70 it went, 71 it went. You can literally live. Oh sorry, ये quarterly था. Sorry. Yeah, you can see here, still here reducing. 17 से लेकर like 12 हो गया, 2 हो गया, and public का क्या हुआ? 28 था, 70 हो गया. So who is in loss? It's the retailers, it's the public, it's we who are in loss, not institutions. They exit. These huge volumes of selling. These are the clear indications they are exiting the stock, which means the stock is not available at a discount. It's them selling, and them selling. तुमको समझ जाना चाहिए that something is wrong with the stock, which is only they are selling. And we got to know at later stages कि like उनका कुछ conflict हो गया with like Big Bazaar and Amazon got into a conflict of uh, some warehouse, कुछ deal का conflict हुआ. You can Google about that, which is why it has shut down all of this. We got to know that at a later stage, but the stock was falling from a much what you can say earlier than that, which is why you don't wait for the news to come down. You don't wait for any confirmation. You only see the price action, and you make your decisions based on that. This huge falling, this huge falling, in a week it fell by 40%, 41%. मतलब what to even like 40% in within 1 week down. This is not a discount concept. This is clear indication that get out of this stock or don't even touch this stock if you want to buy further. Okay, so the golden rule which will save from all these disasters is that never ever buy a stock which is below its 200-day moving average. This is the golden rule. You can avoid literally any market crash, because any market crash happens below its 200-day. I will show you to this red line. What happened? Crash happened. It went to pennies where below its 200-day moving average. You can see even this one. Yes Bank. Where did the crash happen? The stock was good as long as it was above its 200-day moving average. What happened when it went down its 200-day moving? Here is where you get out. Here is where you don't even touch the stock, because every crash happens below its 200 daily moving average. Not only these, I will show you in US markets also. Just like randomly track them kabhi kabhi. I was active in the markets when this was actually happening in 2022. US ka two major banks two major bank, it collapsed. They were huge, huh? They were huge, and it was so much shocking to people. एक था, I guess, स्विस नहीं था. Two major banks of the US. Yeah, here it is. Signature Bank. Signature Bank. You can see here. कहाँ का था और कहाँ का आ गया in within such a short amount of time. And you could have saved yourself by avoiding this stock, because it is below this line. Below this line, every crash happens below this line. This is a golden rule which you have to fix in your head. Once it went below this line, you should sell everything, even if it's at a loss. Even if it's at a loss, you should have sold everything when it went below this price. uh, I remember some people from the US tweeting about this around here they around here when it like fell humongously. They tweeted that why did this such a good bank, such a huge bank crash? And when this got me interested, and I when I went to its chart and checked, I told them it it did not crash now. It gave the signs of crash way back. Way back मतलब अप्रैल में दिया था और crash happened मई में. I mean there are clear signs because it was below its 200 uh, this line. One more उसका क्या था बैंक, wait, I try to remember its name. Swiss बैंक था या I'm not able to remember its name. Okay, चलो वो छोड़ो. All major market crashes happen below this line. It's a golden rule. You can even apply it for the indexes as well. निफ्टी का देखो, कोविड का क्रैश आ गया. कोविड का क्रैश आ गया. Literally, it was so horrible, and index falling by this much percent, and it happened below this line. Whatever happens below this line. Not even this. You can historically go back and apply this concept to any major crash like the ग्रेट डिप्रेशन हो गया, या निफ्टी आईटी का आईटी बबल जो बर्स्ट हुआ था 2000 में, उसको अप्लाई कर लो. या फिर 2018 का, आई गेस यू हैव हर्ड अबाउट द फाइनेंशियल बबल. क्या बोलते हो, हाउसिंग प्रॉपर्टीज का द बबल बर्स्ट, एंड लिटरली इवन यूएस स्टॉक्स एंड एवरी इंडेक्स वाज डाउन. And what and it crashed literally below this line. You can see here, as long as it is below this line, you don't even touch stock or index. You won't touch these when it is below this line. You can see so much crash. And when it is above this line, it's good, it's fair and well enough. But once it enters below this, you don't touch it, you don't mess with it. You can see here, such a huge fall. I was saved by this fall actually. When it gave me like signs around here, I like loss हुआ because it was such a sudden, because COVID was what you can say, unexpected pandemic. But February के last week में ही like the market started falling humongously. Index में ऐसा like दिखता है तुम्हें like ये गिर रहा है. If you go and see individual stock, it is much more bloodshed than this, because this is an index, this is just general. Individual stocks fell far more than this. So I was confused like कोविड का उस टाइम फेब्रुवरी लास्ट वीक में मुझे कुछ भी नहीं पता था, एंड 90% ऑफ इंडियंस दे डिड नॉट नो. आई मीन वेरी फ्यू पीपल नो, यू कैन से, इवन इफ आई डिड नॉट न्यू अबाउट लाइक कोविड का क्या चल रहा है या कुछ. बट द स्टॉक्स वर प्लमेटिंग लाइक हेल. आई वाज कंफ्यूज लाइक कोई ये क्यों हो रहा है सब लाइक. बट स्टिल आई हैड नो क्लू. बट स्टिल, सिंस it went below this line, I had to sell as per the rules, and I did it, and it saved me from this little down move. क्यों हो रहा था? बिकॉज कोविड का पैंडेमिक था, इसलिए ये सब हुआ. न्यूज कब आया, लाइक हमें कब पता चला? मार्च में पता चला, व्हेन मोदी जी अनाउंस्ड लॉकडाउन इन मार्च 23rd. एंड यू कैन सी उसी दिन मार्केट ने बॉटम किया एंड स्टार्टेड गोइंग अप. व्हाई? बिकॉज as I repeatedly keep on telling, markets are future looking creatures. They do not uh, what you can say, trade based on the past or the present. They always, even before COVID, like the pandemic spread, market has already fell. Even before COVID had already got over, market started rising. Even though every business was shut down, every economy was shut down, what would one think was that market will fall more. अभी करना ही नहीं है trade. But what happened? The COVID rally, humongous rally, because stock markets are future looking creatures. They knew that once the economy recovered, like cash would flow, every like business would like come out of its shell and everything. And this my friend, you can see here, this phase, this phase COVID का second wave है, which was even deadlier than the first wave. And I remember people being so much bearish around this time. I remember it literally. They were like, अभी तो मतलब market इतना गिरेगा कि कोई imagine भी नहीं कर सकता. I was like, okay, you have your views, it's okay. I'll just trust my charts. And what the market did? Market literally just consolidated for a few weeks, and उसके बाद क्या हुआ? Again it given up more. It does not care about the news. It does not care about fundamentals. It cares only about what the big guys think, only about what they do. And here at this time everyone was confirmed कि हाँ कोविड तो चला गया. I mean कोविड ऑलमोस्ट गॉट, ये अक्टूबर का 2021 का टाइम है. एवरीवन वाज कन्विंस्ड कि या कोविड से हम ऑलमोस्ट बाहर आ चुके हैं. लाइक मार्केट भी लाइक अभी बुल बुल रन में है एंड एवरीथिंग. एंड ठीक उसी के बाद क्या हुआ? मार्केट went into bear market mode. Why? Because markets predicted a recession would come in 2022, way before that. Way before it recession actually happened. अभी recession चल रहा है. Way before that market started falling in, because they are forward looking creatures. They are like that. This one fact you have to always keep in mind. Yeah. So this is the golden rule. Do not touch a stock if it's below its 200-day moving average. This is Silicon Valley Bank. I had already shown you. Okay. Yeah. So see here, it crashed like hell, but it was already below its 200 day. A smart person would not even touch this stock when it broke this line. When it broke this line and went around here, he would not even touch the stock. And see, he could have avoided all this and even this crash. Okay, and all of the Adani stocks. Yeah, I'll show you all of these crashes. They happen below this line. See, crashed heavily below this line, and see here. Yeah, uh, Adani port. Almost all of the when Hindenburg report came, and yeah, see here. It was already below this line when this crash happened, and this one. What was that? Yeah, this one. ATGL. See what happened? It went below this line and it crashed like hell. And this was a havoc. It got stuck in circuits, lower circuits. You couldn't even sell it. Okay, you couldn't even sell it around this time. All you could do was watch it going down. See how much percent it went down here. It it went by 75% down from this point. You should be, okay, so 80% down from this point, which is why you, if even if you ignored all of the major things which I tell you, even if you followed this one single rule of not buying stocks, or even if you had bought it by simply selling it, if when it is below this line, when it is below the 200 daily moving average, you could avoid all of these crashes. All of the Adani stocks, yeah, all of them crashed below this. You see, all of this happened below this line. Nothing happened. I mean, the crash made majority of these crashes, they happen below this line. Okay, which is why it's very much important, the significance of that line. Okay, so introduction to momentum investing. What is momentum investing? In momentum investing, we follow the trend. It's a trend following concept. We we ignore the traditional approach of buy low, sell high. Why? Because I've shown you in literal charts how vague concept it is, how disturbing concept it is. I mean, what am I saying? I mean, how bad concept that is. It can literally get you in losses. It can literally get you trapped in stocks like Yes Bank, Future Retail, Netflix, yeah, Tesla. You study hundreds of them. You can get trapped. That is why you never buy low, sell high. You buy high, sell higher. Why? Because once a trend, once a uptrend is established, you buy it at high. Even if it's trading at high, you don't wait for it to fall back. You buy it high, it will go even higher and you can sell it there. Why it will go even higher? Because once a trend is established uptrend, it the trend can continue for weeks to months, as you saw in the charts. This is the whole idea funda behind this. Of course, every time it does not happen. Every time you cannot be 100% right. Even when you buy high, sometimes it will fall below your buy price. That is why we have stop loss in place where it will get you out for 8 to 10% loss. Yeah. So this is a trend following principle. This is momentum investing. It's a game changer. Okay, this is William O'Neill. He is a legendary stock market trader. He recently passed away a few months back. He discovered this concept like way back in the 90s or so, and he established his own company. He followed momentum investing principles and made it popular. Okay, so his one of the popular quotes is, what seems too high and risky to the majority generally goes higher, and what seems low and cheap generally goes lower. I'll show you in the chart what this means. Adani, okay, this one, okay. So yeah, this stock rated an all-time high. Its P was hypervalued at this time. Fundamentalists, you could go and check. Fundamentals were given giving idea that it is 40 times its P. You should avoid this stock. You should never trade such a high P value, P ratio. Uh, they were giving they were writing articles at this time saying that it has wait uh, uh, now it seems like such a small candle, but if you go back in time, if you replay it, how it would look, I will show you. It would look something like this. Yeah. So it went 42% in a week. 42% in a week. Can you imagine? With such a huge volume. What this indicates to me is institutional buying. What it indicates to normal people is इस स्टॉक को छुओ मत, अभी इतना ऊपर गया है तो अभी पक्का गिरेगा ये. So this is what the wrong thinking people have. And what happened? I'll show you. The stock, what happened the upcoming weeks? The stock, you can see the stock literally kept on going up, kept on going up. What seemed too high, even at this point, what seems too high, it can go even higher. It can go even higher. This is what he meant by that. You can wait 1 second. Yeah. What seemed high to me, to or not to me, what seemed high to most people at this point, November 2020, it kept it literally went on bonkers. You can see here. यहाँ पर एक वीक में 40% दिया था, ये कंसोलिडेट किया ये साइडवेज. उसके बाद में how much it gave? It gave another 300% move within months to follow. This is why momentum is so important. And it kept on going. It did not stop. It kept on going until here. You can see here 200 day iska breach hua. This gives you a selling signal. I mean, this is I use another signal. I'll be teaching you in technical, but just general idea. उसके बाद क्या हुआ? Crash. As I had told you, crash below this line. Literally that happened. Literally that. This simple concept can save you from a lot of what you can say, I remember so many people like Adani का like news यहाँ पर आया कि like वो Hindenburg का report, and they thought that discount पे है तो चलो ले लेते हैं, they bought it around here, and they're sitting at such a loss, and it won't recover anytime soon coming up. It won't recover. Such a simple line, such a simple golden rule can save you from such humongous pain of losses and everything. This is why technical analysis charts is so much important. And what seems too low, in his quote he had said, here it seemed low, but it went even lower. It went even lower, it went even lower, it went even lower. What seems too low usually goes lower. What seems too high usually goes higher. This is what he meant by that. For example, even this future retail, what seemed low kept on going lower, kept on going lower until it was penny. And during its uptrend here, during his initial IPO based breakout, you can see here, एक ही वीक में इसने 20%, 19.9%, 20% रिटर्न दिया. It seemed high, it would seem high for many people. मतलब इतना दिया, ऑल टाइम हाई से इतना ऊपर है, मतलब गिरेगा तो गिरेगा. बट व्हाट हैपेंड? It went even higher. It went even higher. This is uh, what he means by that. This is what we follow. Okay, is contradictory to your buy low, sell high, which is a wrong concept. In most cases, it leads to losing so much money. We buy high, sell higher. By doing so, we stick with the institutions, we stick with the probabilities of gaining more. Okay, why? Because when you buy high, sell higher, basically what you are doing is you are simply with the trend. Okay, what you are doing is when you're buying high, okay, you are already with the trend. Okay, suppose if a stock is an uptrend and you buy it high, okay, you buy high and it goes even higher and then you sell it. Okay, by sticking to this, you are increasing chances, because like I said, when a trend is established, it stays there for weeks, for months. Okay, so you are increasing your chances of winning by sticking with the trend. Okay, which is why we follow the trend. This is a trend following mechanism. So I can show you like just one second. If you want to see this year's, I already showed you Cochin Shipyard. Yeah, trend following. See, you buy it here, even though it was at an all-time high. What most people would be telling you is that you buy when it falls here and then you sell it here. Sometimes it works, majority of the time it doesn't. Yeah, so I bought it high and I sold it even higher. This is the concept. Even this one, G1, yeah, it broke this trend line. It made an high here, and I bought it around this time and sold it around this time. Yeah, so buy high, sell higher. Even this SDBL, yeah, you can see here, bought it around this when it made all-time high, and it went like crazy. That and Masdoc, and wait, let me show you this one, Power Mac. Yeah, I even traded this. I bought it at here when it seemed high, when it seemed too high, and look, it went even higher. And uh, this one, yeah, GBME, yeah, bought it around here and captured a major chunk, sold around here. So this is, there are plenty of examples here. Even HSCL, yeah, it's still going up because of the concept that what seems too high usually goes higher. Yeah, so there are many of such examples. This one, Jindal saw, yeah, bought it around here, sold it around here. Yeah, and case also you can see all of these, what seems high, they usually tend to go even higher. But yeah, many of them they fail too. Okay, I'll show you in the later just some of the failed, which is why you need to have, when you need to know when to sell when it goes against you. explain you what is stage analysis. So, what stage analysis? It was first popularized by Stan Weinstein, and it has been even included by Mark Minervini. So even he follows the stage analysis concept. So what this stage analysis means is that usually for the majority of the stocks, except for some blue chip stocks like HUL, Asian Paints, etc. Majority of the stocks, they follow this stage analysis. They move in stages. Okay. Uh, when so it consists of four stages. Yeah. So in a stage one, the stock is neither going up, neither going down. It is just moving in this fashion. Okay, this it's just moving in this sideways fashion. Yeah, and this is the 30-week moving average, or you can even use a 200 daily moving average. Yeah, so it will be just suppose this is the 200 daily moving average. Yeah, the stock price would just be oscillating around this. It would just be oscillating around this point. This is stage one. It indicates stage one. What we as momentum investors do is we keep a watch on these type of stocks, but we do not buy them. Okay, because how long stage one goes, you never know. Okay, you should not buy it at stage one. You should wait for a confirmation of it to enter stage two. Okay, so when a stock enters stage two, what happens is it starts making higher highs and higher lows on the weekly time frame. Yeah, on the weekly time frame it starts making higher highs and higher lows. And what the 200 daily moving average will be doing is its slope would start to increase. It would start pointing upwards. This is an indication that 200 daily moving average pointing upwards and the stock making higher highs and higher lows on the weekly time frame indicates that it is it has entered a stage two. Okay, so what momentum investors do is we buy stocks in an early when it enters early stage two. Okay, when it enters an early stage two, we buy it and we ride this whole trend. We ride this whole huge rally. And next is the stage three. What happens in stage three is the 200 daily moving average 200 daily moving average, it flattens out, and again stock price will be neither moving up, neither moving down. It will just be oscillating around this point. I'll show you live examples of this. Okay, now two things can happen after this. Either a if the 200 daily moving average after this point, if it again points upwards, and if the stock again starts moving higher highs, higher lows, then it means that the stage 3 was same as stage 1 and a new stage 2 has entered. Okay, listen carefully once again. After a stage 3, if the 200-day moving average starts pointing upwards, if the stock again starts making higher highs and higher lows, what this means is that the stage 3 was a stage 1, and what it is currently doing is it has entered a stage 2. Got it? Now the other thing can also happen. Yeah. What it is the stock breaks this rectangle. I mean, the stock starts making lower highs and lower lows, and the 200 daily moving average starts to point downwards. This is indication of a stage 4. You sell immediately on recognition that a stock is in a stage 4. Okay, you do not ever touch stocks which is in a stage 4. Yeah, because how long it will, what seems too low usually goes lower. You think that it is available at a discount around here, it goes even more down. You think it is a discount around, it goes even more down. Okay, so this is a uh, um, I'll show you a live example. This is a stage analysis concept, very important concept. I'll show you example. This is Zoom communications. Wait. Z- Nasdaq. Wait. Yes, this one. This perfectly has followed stage analysis. I'll show you. Okay, look at here. Wait. Yeah. Uh, so this, let me just, so you can see here, this was flat. This was a new stocks. This was flat. The price was neither going up nor going down. I mean, consistently, it was just oscillating in this region. Yeah, you can see here oscillating in this rectangular region. Okay, and what happened, the 200-day moving average, you can clearly see it pointing upwards. Its slope became positive, it started pointing upwards. The stock started making higher highs and higher lows, and this is a weekly time frame. Okay, higher highs and higher lows were started by the stock. It entered a stage 2. You buy around this point. Okay, there are many other criterias, so please don't think that this is the only one, and you should know when to get out of a stock if it goes against you. So I don't recommend you learning this and directly going and buying stocks which have entered a stage 2. Stage 2 is just a skeletal structure of the whole momentum investing. Just for your understanding, there are a lot other criteria which you need to consider to buy. Just because a stock is in stage 2 does not mean it is a buy. But what all the stocks a momentum investor buys, they will definitely be in stage 2. Okay. So, I mean, you could buy a stock in stage 2, but if it starts going down, you should know quickly when to sell it, when to cut your losses down. There are other criteria which I use for my buy criteria. And if it goes against me, there are sell criteria which I follow to immediately sell it, to show you some failed uh, trades. Let me show you this. Zomato, I guess you have already seen. Okay, it had just entered. It had just entered stage 2, but it failed, and I had to sell it. And there was this one. Where is that? Dream Folks. Yes. So you can see here breakout, and I had bought it, and what happened? See, stage 2 enter hua, and this huge thing happened, this huge sell off, and I quickly immediately got out roughly around this point, and I did not take this huge loss. I had booked little bit loss, though I had bought it at here, so it was not actually a loss for me. I made some decent gains on it. So just because it is in a stage 2 does not make it a buy. I mean, does not mean that you should go and buy these stocks, because I don't want to making losses. Yeah, this is just for your uh, knowledge. Even this one, Tega, I had bought it. Okay, see, entered IPO based breakout, entered stage 2 here, and look what happened. It's languishing right now. Okay, so you should know when you should sell the stock. So I don't recommend that. Okay, so coming back to this stage analysis. When it enters the stage 2, you can see here, and look at here. This is a stage to full rally. You need what we as momentum investors do is we capture the majority chunk of it. You cannot precisely time at entering at the bottom and exiting at the top here. No one, it is impossible to do it. Our job is not even to do that. Our job is to catch this majority chunk of it. It will be more than enough. Yeah, and you can see here then what happened. This is a stage 3, and after the moving average flattened out, yeah, this whole thing is a stage 3. And after which the moving average started pointing downwards. Yeah, you can see here, and the stock started making lower highs and lower lows. The stock entered a stage 4, and look at here, look at what happened. It's still languishing now. Yeah, it fell so much, which is why stage analysis is so important. Because imagine if you had bought the stock here, and if you were a buy and hold investor, if you had held this stock, you would be at zero gains, negligible, which is why it's important to sell it. One more thing I forgot to tell you why it is important to sell is Yes, I got it. So, see here, this was the rule coined by Mark Minavini. You can see here the 50-80 rule. What he has found this rule, he has discovered this. When a secular market leader makes a major top, there is a 50% chance that it will drop by 80%, and there is an 80% chance it will drop by 50%. Okay, you can read that again. There is a 50% chance it will drop by 80%, and there's an 80% chance that it will drop by 50%. Okay, this is, I'll show you the live example. You can see even here, when it made a top, it went down. You should never buy and hold. This is why. Lotus Labs, see, picture perfect stage analysis. This is stage one. See here, stage one, stock is just oscillating between the this 200-day moving average and it's flat. Entered stage two, the moving average started pointing upwards. You buy it. It made a huge, gave a humongous rally of 200%. Yeah. Stage three, it again flattened out moving average, and stage four, moving average dropped down. Yeah, you can see here this, when a secular leader makes a top, there is a 50% chance of it falling by 80%, and there's 80% chance that it will fall by sorry, not this. There's 80% chance that it will fall by 50%. It will fall by 50% at least. So not just this, even mind tree. I can show you like hundreds of examples of these stage analysis. See, stage one, this huge is stage two, this is stage three. You get out here, and this is stage four. See here how much it has fallen. See, 80% it fell from the highs. Every good stock will fall. I mean, which is following stage analysis, it is bound to fall according to that rule. I'll show you. These were all traded by me in the COVID rally. So 2020, 2021 bull rally. See here. Perfect example. Stage one, stage two, stage three, stage four. Look at how it fell. Even this. See. Perfect. Stage one, perfect cup with handle breakout. You bought it here. Made huge gains around here. You can see. Stage three, and you can see what happened with it after that. When it made a top, it fell, which is why it's so important to even this HEG. You can see perfect. These are all classic examples. I'll tell you there are many more. See, stage one, flat moving average. Moving average started pointing up. Stock started making higher highs, higher lows. You buy it based on your buy criteria. You can see it made a humongous rally. It wait. Stage two rally, stage three flattened out moving average started pointing downwards. You sell it around here, okay, and look what happened after that. It's down to the same point which you had bought it, down to the same point, which is why I don't advocate buy and hold. I always buy, follow the trend, capture the major chunk, and I exit once it gives me exit sense. See how much returns. Even if I had sold it around here, forget about selling at top. Even if I had sold it around here, 500% more. 500% means 6x your capital, 6x the money you put. This is the power of momentum stocks, the fast moving stocks, the stage analysis. This is its significance. Okay. This is its importance. Yeah. Uh, some recent examples of stage analysis is this one. Yeah. This you can see here, stage one, stage two it entered, and it is still in stage two. Stock is still making higher highs, and though it is extended. Okay, I now please don't go and buy this stock around here. Okay, I don't advise you to, because it's already extended. The ideal buy point was anywhere near this region. Okay, it's a little bit extended, so it might go up even from here, but you should know how to manage risk, okay? And because I don't want you to blindly go and buy this, and if it starts falling and if you're in loss and then you blame me, okay? It's just for the education purpose I am showing you, okay? You should have your proper buy rules. If it goes against, what if what if it starts going down from here? You should know when to get out. Yeah, so that is there. And this one, these are all these are all live examples which are currently happening in the market. See, stage one breakout, it's in stage two. This one, it's in a stage two, okay? And even this this is a this is still a very early, what you can say, in the early stages. It has potentially entered a stage two, okay? Not a buy recommendation. The markets are also not showing that much strength, okay? This is just for your uh, demonstration, okay? And I guess even, yeah, even this, see, and this is stage one. It entered stage two here, and now it is consolidating a bit. If it moves up from here, it would be a positive sign. Potentially entered a stage two. It has entered a stage two. It's consolidating right now. So again, not a buy recommendation. Do your own analysis, please. This is just for your knowledge, which I'm showing. Okay. So Olectra, it gave a breakout around here, and it's currently consolidating after a good up move. So yeah. So these are some of the examples. I hope you understood the importance of them. Next session. If you have any any doubts, any questions, you can ask me.
Yes, actually, I had one doubt. Not
Yeah,
exactly a
yeah,
doubt. See, according to stage analysis,
yeah.
a stock goes first starts from stage one, then it goes into stage two, then it consolidates, which we call as stage three.
Yes,
Then it moves into a downtrend, and then the cycle
yes,
repeats, right?
yes, yes. The cycle can repeat or cannot repeat depending on the stocks. I mean, depending on stock. If the institution
So,
see, yeah, there is no
so if
guarantee that the
yeah,
once it completes stage four, enters stage one, there is no confirmation that it can again, what you can say, make this cycle happen. It might not enter stage two for its entire life again. It also happens. Yeah.
okay. So yes, because I was wondering this Yes Bank or the similar stocks that you showed,
Yes.
which are which completed their journey from stage one to stage two to stage three, stage four, and they are now at again stage one.
Yes. Yes.
So I was wondering, will you ever buy these stocks again if they show signs of moving into stage two?
Okay. Yeah. Uh, for stocks, the problem with stocks like Yes Bank and these which had major business model, what you can say, flaws. Yes Bank का कुछ like लफड़ा हो गया था. I remember in 2018 or something, which is why it fell humongously the upcoming months. And so much retailers are trapped in Yes Bank. I would not. Uh, I mean, maybe a small amount of a portfolio I could consider it in stage two if it shows me a strong stage two, which is heavily unlikely, for because it had a major flaw which led to the institutions exiting it. It is very unlikely that it will enter stage two. But even if it enters, there is a concept called overhead supply. I'll be teaching you that overhead supply. What is that, and why I don't in like I am not keen to enter such stocks. You can see it's slowly trying to turn the trend up, but I'm least interested in it. I probably won't consider it even if it, because there is a concept called overhead supply, which which limits that, which tells me, which is, I'll tell explain it to you in detail, which tells me that even if this starts a stage 2, there are potential major resistances to it. Here is one. I'll teach you this in like in depth. And here is one. Here is one. And finally here is one. These horizontal lines, what you can see is that these are very very powerful lines, powerful levels. Stock, even if it entered stage 2, it could reverse from here. There is very high chance, because this is an important line. I'll explain you why. It's a concept of overhead supply. And even if it broke here, its next major resistance was here. It has very strong chances to reverse from here. Or even if it broke here and went here, it has chances to reverse from. This is concept of overhead supply. I'll be explaining it to you. So you usually kind of avoid business flawed models like yes bank. इसमें कुछ actual लफड़ा हो गया था, इसलिए like it plummeted here. Otherwise I would consider even like what you can say, some stock which whose name I haven't even heard. For example, what, हाँ यस, वीनस पाइप्स आई कैन गिव यू। मतलब अभी भी मुझे इसका ए बी सी तक नहीं पता, इसके बिजनेस का ए बी सी तक मुझे इसके बिजनेस का कुछ भी पता नहीं है। ये लाइक रिसेंट आईपीओ लॉन्च हुआ था एंड इट गिव मी एन आईपीओ बेस्ड ब्रेकआउट आफ्टर इट इज स्टेज 1 ब्रेकआउट। दिस ऑल्सो स्टेज 1, इट डज नॉट मैटर द ड्यूरेशन फॉर विच द स्टेज 1 occurs, this is still a stage 1. Okay, so it give me stage 1 breakout. I am looking for fresh stocks like this which don't have overhead supply here, too much overhead supply here. I'm not looking for that. I'm looking for these. Okay, so I prefer these, not that, because of the overhead supply. I'll be explaining it to you in what you can say, upcoming sessions. Yeah, this is the Loris Labs. I would be considering stocks like these, where there is no overhead supply here. It gave a fresh stage 2. I'm interested in these stocks. Yeah, I might consider Loris Labs if after some 3 to 4 years, it in stage 1 it suddenly turns into stage 2. I might consider. It has to be some good years of gap for me to consider that. That would indicate that the overhead supply has been exhausted down and it's a fresh stage 2. That would uh, indicate me that. So yeah. So anything.
Okay. So basically, but then again, this raises a question: will you find stocks like these, with stocks which have less overhead supply? Will you find stocks like this all the time? Like even from 10, 20 years, 30 years from now, will you keep finding stocks like that?
100%. These the this picture I've taken of him and this stage analyst. This stage analyst is Stan Weinstein. You can go and check in from which year. These are momentum investing concepts, which is followed by Mark Minery, Nicholas Darvas, William O'Neilly. They have been trading these since 1990, in the 1900s, since 1929, 1930s, 1950s, and they are, you can, as I displayed, they are relevant even till today's now. Even till today's market, they will be for the next 30 years, next 50 years, next century, and the upcoming century. It will never change. It will never change. Yes, in a bullish market, there will be hundreds of such breakouts. I mean, like not hundreds, hypothetically speaking. There will be a good number of breakouts. For example, Venus Preps का मैंने दिखा दिया. Keynes. Yeah. This is a recent IPO. You can see no overhead supply, null to overhead supply, IPO based breakout, stage 2, still in a stage 2. You can see here. This and this one, this one, IPO, perfect IPO based breakout, still in a stage 2. These are all this year stocks I'm showing you. And another one is this gave me a little like short term profits, you can say. This IPO based breakout हुआ इधर. I bought, I was in this stock, I bought this, and I sold it this year. This line I've drawn, I literally sold it and avoided this huge fall. It failed stage 2. These also happens. You have to be, what you can say, you have to be cautious, because not 100% is, not everything is 100% guaranteed in the markets. These do happen, okay? Which is why you have to have your stop losses in place. This stop loss protect me from this huge fall. I sold it at around like some 8 to 10% from यहाँ पर नुकसान हुआ, पर actually I was in profit because मैंने यहाँ पर buy किया था IPO बेस पे record. This much profit I had, around 25% के आसपास था ये था. And this one देगा. Yes. इसका भी आईपीओ बेस्ड ब्रेकआउट यहाँ पर हुआ था. इट गिव मी 20. आई हैव ऑलरेडी एग्जिटेड इट 27% यहाँ पर. या यू कैन सी हियर. एंड इट इज फेलिंग नाउ. दीज फेलियर्स आल्सो do happen. It's not like always you will be in you will get a perfect stage 2. This one K solves, you can see here. It is not an IPOS breakout though, but yes, stage 1 से यहाँ पर huge volume के साथ stage 2 it has begun, but recently the trend has been uh, reversing. So you would get out of this. This is the trend line. I'll literally I'll show you how to draw these lines. So you get out once this line is breached around here. So you have profit from here to here. How much is it? It will be enough to enough to fill your sufficient for your appetite. I will tell you. 100% more than sufficient, right? So even though at least 30% तो दे ही देंगे, 30 to 50 to 100 तो दे ही देंगे आराम से. Okay, so no need to worry about that. So these will be
Anything over 20% is phenomenal. Yeah. Anything over 20%
अरे
is phenomenal.
आराम. Yes, yes, आराम से देंगे भाई. Like um easily it will give you one more was that. Wait. This one यहाँ पर इंडिकेशन दिया था. और अभी now the market is like correcting, so like almost all of these are falling back, but yes, you can see it has begun its stage 2 here. uh, Not that good of return, but yeah, you can see around यहाँ पर सेल किया होता साइंस ऑफ वीकनेस पे, so 28% के आसपास मिल जाता है ये वाला. एंड पिक्स transmissions, this one also, but it's a trend reverse, so you get out of it around here. So this is around some 10% ka. These like you can say 7 out of 10 trades succeed, 3 of them fail. So these are some of the failure ones. So it happens, yeah. So you'll get a plenty of them. You don't have to worry at all. You'll get plenty of them. स्टेज 2 पे है अभी, ये कंसोलिडेट कर रहे हैं. यू कैन सी यहाँ से ब्रेकआउट किया. स्टे लिटरली इट्स इन, यहाँ पर साइडवेज गया. यहाँ पर इट्स it went in uptrend again. It's going in sideways. And this one,
Yeah, this is
yeah.
showing a cup and handle, I think.
Yeah. I'll teach you. Yeah, this one is, you can say, cup and handle. This yeah, cup and handle. Yeah, handle का like breakout हुआ and it give a
Ah,
humongous return.
yes, exactly.
So this one gave a humongous return here. इसका it went up to 180% and now it's down. So I think I've drawn this line here because this is the point to get out. In daily charts we get out. Yes, perfect. You get out around here. You get out around here. Okay. So yeah, it's in a clear stage too. You can see here. If I add more technical indicators, it would be clear to you. But I mean, yeah. So I use not only that one indicator, I use like some more. I'll like show you. I'll explain you like in detail. So here you get out. Okay, so you can see here, fair. There will be plenty of stocks in good bull market which will give you. So no worries of that. Yeah, no issues only.
Perfect, perfect. Uh, that's what my concern was कि ऐसा आने वाले 10, 20, 30 years में ऐसे stocks continue हमको मिलते
Yes,
रहेंगे
yes.
कि in India.
100% it will be 100% will be. This is time tested for 100. This has been existing since a century ago. You can check about William O'Neill. He's 90 years old. He died at 90 years old, I guess. So he has been in the stock market since like 50 plus years. मार्क माइनरोनी को मार्केट में आके 30 years हो गया. And even Jesse Livermore, these were existing in 1920s, 1929s. So they have been doing that since then, and it will never change. It will never change. It will always work because retail psychology will never change. Institutions psychology will never change. They will keep dumping the shares to the retailers. Retailers will keep making the same mistake of buy low, sell high, and they'll be making losses. So yeah, these are like what universal. They will be there till this wait, what was I finding? Yeah, they will be there for the next 100 years or more to come. Finding something need to show you. Wait, uh, is it here? Ah, yes, this one. This one is saved checklist, randomly save कर लिया था क्योंकि I was out of station. I had to like save this from the scanner, so मैंने save कर लिया था. This is the list it provided me when I scanned these. You can literally count like how many they are some 45 stocks. There will be even more. These are all strong stocks. एक दिन में 20%, 18%, 14%, 10%, 9%, 8%. These are all strong. I filter even furthermore. This is my initial list. So initial list पे ही it gave me 45 stocks. So you can imagine after filtering easily I will get a handful of 8 to 10 stocks to trade. So no issues at all during a bull market. Even I'll tell you a fact. In fact, you will be confused in a bull market ki like when you scan this, almost all stocks will be looking strong to you. You'll be confused कि किस में डालूं मैं. So you have to further dig into it. उसका प्रॉब्लम आएगा कभी भी. लाइक ये प्रॉब्लम नहीं है कि कोई स्टेज टू पे नहीं है. ऐसा प्रॉब्लम नहीं आएगा. बहुत से स्टेज टू पे आ गए हैं अब उनमें से स्ट्रॉन्गेस्ट इसको चूज करूं, इसका प्रॉब्लम आएगा.
Yes, yes. That is, I think that is very normal. If you get about 10 to 12 stocks and you have to
More
filter
than
through
enough.
it, yeah,
Yes.
that is like, if you want to find the strongest in 10 stock, that is a lot of options.
यस यस एग्जैक्टली. सो तुम्हें उसका प्रॉब्लम आएगा. तुमको लाइक देयर
हाँ,
विल बी मेनी स्टॉक्स गिवन टू यू. यू हैव टू पिक. आई मीन यू हैव टू इन्वेस्ट इन अ हैंडफुल ऑफ देम बिकॉज ओवर डाइवर्सिफिकेशन नहीं करना है. इट किल्स योर प्रॉफिट्स. यू हैव टू कीप
exactly.
मैक्सिमम ऑफ 10 stocks ऐसा. So there is no issue. There will always be stage two breakouts because
Uh,
institutions will make that happen. They need profits. ये होकर yeah.
uh,
Recent example I can give you was Utkarsh बैंक का नहीं था. Wait. It was of this one. It was of wait. Yeah, this one. See, actually I made my brother invest in this one.
uh,
I told you my cousin brother. Wo,
yeah, yeah, yeah.
I
You
have
go,
taught him
go,
that. And yeah. When it breached this IPO base, I had told him it literally entered stage two, and it is still it will go sideways for now because the market is uh, doing a pullback. So
yeah,
yes, so from here till now it's 62%. So easily
uh,
he has around 50% in this month. Yeah. So you can see here अभी live है. अभी कहाँ पे जुलाई 2023 पे हुआ था. So these are this year's examples I'm giving you. There will be plenty, man. There will be plenty. No issues.
I see. Yeah, so I think we can just move on to more stuff in the next session.
Yes, in the next session I'll preferably start with the technicals.
Yeah, yeah,
क्योंकि
perfect.
like momentum का ये like basic ये हो गया. And we'll get into the patterns and slowly. Yeah.
See,
Stocks, we don't sell too early. As I had showed you, we hold till it's in an uptrend. We follow the trend, and when the trend reverses, we have sell rules. We sell them immediately when the trend reverses. So, and we most this is most important of all of them. We manage risk by selling when the stop loss hits. We don't question it. We don't argue with the markets because the markets are always right. We are wrong. Yeah. See here. This is all a probability game. The whole secret to winning is winning. Uh, Winning and losing in the stock market is to lose the least amount when you're not right, okay, and to gain the maximum amount when you are right. Yeah, so it's all a probability game. 7 out of the 10 trades which I take, usually 6 to 7, you can say, in a good market, they turn into profit. And when they turn into profit, I don't sell them too early. I let them ride. I keep on adding my position sizing. I pyramid them to, so they give me usually 30 to 50% at least, at the least. Some go up even up to 100%, and 3 to 4 of them they fail at an average loss of around 10%. I sell them around loss of 10%. Okay, so this is all the part of the game. You need to follow your system. Okay. Uh, should I discontinue investment in mutual fund, since you explained fundamental investment and the absurdity of it, or it could help being part of the very institution inside the price, or whatever is good from a perspective? And the second, okay, let me address this. Please don't get confused. Okay, what many of them get confused about is that I'll explain you. Okay, see, okay, mutual funds are not to be timed. Okay, they should always be kept for 3 to 5 years of long term, just 1 second. Yeah, so mutual funds, they, if you're investing, you should have at least 3 to 4 years of time horizon. What most people end up doing is, what I have observed is that they enter into mutual funds only for a year or so, and they uh, to clear you up, see, one of the people I knew, they had started investing in mutual fund around October this time, and what happened was that they had started SIP. They did it for some months, and then when they saw their returns being negative, why? Because the market entered a bear mode. Okay, they stopped the SIP, and now they are at a little bit of gains, because you can see the market has moved a little bit. They are at a little bit of gains, but it's negligible. Had they continued their SIP throughout this period, throughout this whole bear market period, irrespective of what the market is doing, because I'll tell you, the market in the long term, it is bound to go up. It is bound to go up. I'll show you. It is bound to go up. This is from the 1990s. In the longer frame, it will always, always, always go up. Okay, unless something happens significantly to our economy. Yeah, like if we go bankrupt or something, in such case, it might languish. But there is no such thing happening in the near term or so, or anytime. So, yeah, which is why if you had done SIP in this time, it would have averaged out. You could have seen some good chunk of gain. Okay, which is why I recommend most people to do s if you're doing if you're doing SIPs, if you're doing mutual funds, at least keep a time horizon of 3 to 5 years. Okay, 3 to 5 years. Yeah, and many of them were asking about mutual funds. So my best go is one for one mutual fund for large cap, one for mid cap or small cap, and one flexi cap. Okay, so this is my go-to. I invest in one small cap fund for, I'll be doing it for SIP. I'll doing it for the next 10 years. And one I've kept flexi cap, Parak Parik flexi cap is a good one if you might consider. And one I have kept for passive fund, Nifty. Even this will be for long term, 10 years. Why I don't? There are two types of funds. Okay, actively managed and passively managed mutual funds. Yeah. So actively managed fund manager manages, and in the passive funds, it simply tracks the movement of Nifty. Yeah. It simply tracks what the Nifty movement is doing. Okay. If Nifty is going up, the passive fund will go up. If Nifty is going down, the passive fund will go down. No one is managing that. It's simply tracking the index. Yeah. So why I prefer passive only in large cap is that it's been observed that over a long period of 10 to 12 years time, most of the actively managed funds by mutual fund managers, they fail to beat the index returns. They fail to beat Nifty returns, which is why I uh, invest in a passive fund when it comes to the Nifty 50 large cap. And for mid has small cap, I go for actively managed because they beat passive funds in the uh, mid cap, small cap sector. And flexi cap, I prefer going for Parak Pari, or you can go for any of them. Usually, you won't have significant difference. All of them are more or less the same. And when your time horizon is more, it'll it'll not affect that much. So, coming to your question here. No, man, please do not discontinue mutual fund investment. Okay, mutual funds are kept, they are to be made with an view of long term. Okay, they are investments to be made with a long term view in mind, and you should add on every dip. Mutual funds are to be, I prefer usually SIP every month, and when it enters a bear mode like this, or when it crashes like this, when it crashes, you should buy. If you have lump sum money, you should add more to it. Add here, add here, add here. So you can add here, add here, add here. Yeah. So when it dips, you should add it. This will maximize your returns. Mutual funds are not to be timed. They are kept as a long term investments. Okay, I hope you got that. And the second doubt you had, uh, you said, okay, not to go into penny stock operators, but isn't it a, okay, he's saying that I've said in one of my comments not to go for penny stocks, but isn't it good to ride the momentum along with them? And how are these different from? Yes, yes, good question, good question. I'll tell you what is the difference between them. This post, one guy had posted it in the group. Yeah, see here. This is a literally, this is a penny stock. Okay. Now, why I recommend you to stay away from the penny stocks is because you will get stuck, man. You will literally get stuck, and you won't be. Let me show you this. This is that very stock. Let's switch to the daily time frame. Okay. See its movement. Okay, there are no buyers, there are no sellers here, which is why it moves in circuits. This is circuital stock, and this is why I avoid such stocks. Okay. um, because see, if you had bought it anytime here, okay, there is no movement at all, and if you want to sell it, you won't be able to. These are circuit locks. Okay. This staircase like movement, it represents the stock is in circuit. Okay. If you buy it here, see here, yeah, you won't be able to get out because there will be no buyers when you are selling out, and which is why I don't recommend this. If you get stuck, your money is lost. And coming to your question, what you are saying is that if it is moving in circuits, this is upper circuit, this is lower circuit. Now, why I don't recommend is, first of all, if it is moving, if it is already in a circuit, you won't be able to buy it. There will be no sellers when it is an upper circuit. You won't be able to buy it. Let's say even if you buy it, even if buy it, there is a huge risk. Even if you buy it, there is a huge risk that it might turn into lower circuit, and when it does, you will get locked out. You will get locked out, and you won't be able to sell it. You'll result in losses, which is why I advise you to stay away from penny stocks. These are penny for a reason. These are highly manipulated. Yeah. And one more thing I wanted to tell you guys is one tip what I do. when I filter stocks or when I want to buy stocks, I usually don't buy stocks which are I usually buy stocks which are in both NSE and BSE. Okay. Suppose I want to buy Ether. I'm giving you just an example. Okay. I want to buy Ether. It is listed in both NSE and BSE. Okay. And from this one, I choose NSE and I buy it. You can choose even BSE. Both are the same. It won't be much affected. This one also the failed breakout. This huge VCP had bought it here and it failed. Had to sell it around here. So okay, leaving that. So I check always if it is listed in both NSE and BSE, and if it is, I usually try going with NSE. That's just my preference. You can buy it even BSE. But if a stock is only listed in BSE, it's not listed in NSE. If it's only listed in BSE, then I don't touch that stock, no matter how good it is looking or etc. I usually try to stay away from it. All right, I stay away from it because what I've observed is most of the penny stocks, most of the manipulated stocks, they are these kind of stocks, they are only listed in BSE. Okay, many of them I'm telling you. So just to be cautious, I don't buy stocks which are only listed in BSE but not in NSE. This was just a suggestion or a tip from my side. You can follow your own uh, this thing. So I usually don't touch stocks which are only in BSE but not in NSE. Okay, if it's both in NSE and BSE, all good. Yeah. So this was about the mutual funds. The more long-term view you have, the better it is because it compounds. Okay, it compounds. So mutual funds. Okay, take a look at this. I had posted this in the group. Okay, so he's planning to invest in all of these blue chip companies for the next 10 years. So my simple question is why, if you want to invest for the next 10 years long term plan, why are you taking the hassle to pick all of these which you think are fundamentally sound? Okay, and there's nothing bad in doing that. Okay, but instead of this, I would recommend going for a mutual fund if your goal is long term for like 5 to 10 years or uske bhi upar. Okay, now why this is also not bad, you can actively pick stock, but why do I prefer mutual funds? I'll tell you. Okay, so what happens is what the mutual fund manager does, or even what happens in even Nifty 50 is that if suppose out of these stocks, or suppose the mutual fund is holding these stocks. Okay, let's say. Okay, and suppose after a year or two, ITC starts underperforming. Okay, ITC's performance decreases, or suppose even worse, let's say if enters a downtrend. Okay, what a mutual fund manager does in such a case is he removes funds from this, and he finds another fundamentally good company at that time and he reinvests the money in that company. This uh, tends to limit your drawdown and tends to give you a good percentage returns. The same happens in Nifty 50. I guess semi-annually or annually, the Nifty 50, the top 50 stocks are scrutinized and the lagging companies or stocks are removed and new ones are added. So this the fund manager is good enough. I would say experienced than us in doing that, and even it happens in Nifty 50. Okay, so now suppose if a person, if he picks these stocks and he starts an SIP in them. Okay, now what would he do if, let me show you, what would you do if it turned out like this What would you do if you're, let's say, you started SIP here, it all went well for some years, and then the third year, suddenly it started falling, suddenly something went wrong. Do you have the conviction in you you have the confidence in you enough to sell it at here and buy another sound company? Or do you have the capacity to analyze what is going wrong in the company so that you can avoid all this major drawdown? Mutual fund manager has that, and he immediately exits from that stock and he reinvested some other good company. Or what would you do in let me just wait. Okay, what would you do in times like this phase, this literal sideish phase, okay, sideways fashion? So instead of getting locked up and wasting all your capital in if it is lagging too much, the fund manager removes it from that list and he picks some other good fund. Okay, this happens a lot. You can see here, even in ITC, for 5 years, it gave zero returns. It was languishing, even though it was an excellent company and had given good returns for the long term. It languished in this fire. Do you have that conviction to immediately cut this, or to predict that something is wrong and to move that money into a good other stock which is fundamentally going up, which is showing good strength? This is usually very difficult for normal people like you or me to do if you don't know, if you don't have professionalism, which is why it is better to not invest in these, and instead, if you are planning for a long term, you give your money to a mutual fund, either passive or active, and invest in that. So that was the theory behind that. And also, the thing I want, the difference between momentum investing in a penny stock like this and in a good stock is that even you can ride a trend even here. Okay, even here you could have ride the trend, but when the trend turned down, when you want to sell here, you will be stuck. You will be stuck forever. See, you could have bought it here or here or here or here, anywhere, but once the trend reversed, you cannot sell it. Okay, you went, you it got stuck, your money got stuck here, it started hitting lower circuits, and you couldn't sell it. It went so down, and see here, you are locked in such stocks, which is why momentum investing or trading in mid cap or small cap stocks which are not penny stocks is important, and avoiding that in penny stocks is also important. Okay, for example, uh, which one should I give? Yeah, this one, Moltech. Okay, so see, if suppose you had invested in Moltech, okay, let's switch to the daily time frame. Okay, suppose you had invested here. Okay, it gave a fantastic 130% up move. Okay, bought it here, and it, you saw its trend started going down. Okay, and you have your system for detecting that you. Okay, so and you want to sell here, you can easily do it. You can easily see huge volumes, huge sell off. You could easily do that in such mid cap, small cap stocks, which is you can manage risk here, which is not the case in some penny stock. Okay, these penny stocks, they are penny for a reason, which is why I advise you to stay away from such stocks. Okay, because when the trend reverses, you can easily sell it, you can easily sell it and save yourself. For example, see here, this is data patterns. Yeah, it's nicely following this trend. Okay, and so it recently broke this trend with a huge volume. So suppose if, as per your criteria, you want to sell it, okay, you are able to get out of it here, but it's not in the case of penny stock. Okay, which is why I don't gamble with penny stocks. They are penny for a reason. They are highly manipulated. You never know what will happen to them, so stay away from them. Okay, I hope this clears everything. I hope this is the end of the session. I hope you guys found some value out of this session. Maybe you might have known majority of things, maybe you might have not known. I hope I was able to add some uh, informative value to you. Please, it would be really helpful if you share your honest views in the comments. No matter if you, even if it's criticism, even if you disliked it, or even if there were some things, or even if you have some any doubt, you can either mention it in the comment below this video, in the YouTube video, or you can, if you have any personal, or I mean, if you have any questions, you can also message me on the Reddit. Okay. So this was about it. Thank you guys. Please do share your honest thoughts about this. Yeah. Thank you so much.